Good morning, everybody. How you doing? Nice to see you all here today. Welcome to the channel Stock Markets with Bruce. I'm your buddy, Uncle Bruce. They call me Uncle Bruce. Here to talk about the markets.
Channel stock market.
Here to talk about the markets in plain English for you, to try to interpret what is happening, what does it mean, and how do you make money. So, as usual, lots, as always, is happening. Those of you who've become regulars of this channel, you've figured out that you have to watch a lot of stuff at the same time to really get a handle on what's going on. Because if you don't, you are just whistling down the roadway, not knowing when a pothole is going to bite you. And you've really got to understand the big picture, the big one, to get a feel for what your investments might or might not do today, this week, this month, this year. And those of you who are not regulars of this channel, if you just stumbled across this channel going, who is this guy? What's with the face for radio? Why is he here? Look, I'm 66 years old, and I entered the brokerage business as a stockbroker in 1979. I've been a desk trader for brokerage companies. I've been a branch manager of a brokerage firm. I've been a part owner of a brokerage firm. I've been a senior VP for a firm. What else have I done? I've been offshore. I've been in the Cayman Islands for a few years, offshore finance experience. I've taken a company public with a business partner of mine over the years. I've done corporate finance work over the years. I have a lot of experience in the markets from a number of angles. And people ask sometimes, well, why do you have so much experience in so many different areas of the market? Can't you just get a job and keep it? I mean, what's your deal? Why have you had all these different incarnations? And I'll tell you the reason, actually. Back in the 1950s and 60s, after the war was over, the stock market business was essentially the same as it had been for decades before the war. There were family-owned firms, investment, investment type firms, banks, and so on. And in any city in America and major cities in Canada, you would have brokerage firms that were regional or local, quite normal, not unusual, and customers, investors, would invest their money into the stock market through their brokerage firm that was local. They trusted those guys because they were part of the community. They were from here, would be the talk. So, as a town of 25,000 people would have a brokerage firm or two or three, and these firms would welcome clients in. They'd have a seating area at the front of the office, in effect, where you could have like theater seating, 2 or 3 rows, and newspapers would be provided, and the ticker tape would be going by, and you would watch the market live from the comfort of the lobby of your local brokerage company. And behind a little bit of a railing would be desks with stockbrokers and assistants and runners and stuff, managers and so on. And you want to make a trade, you would kind of just raise your hand up to get the attention of your broker, who would either come and get you or just wave you in, and then you'd walk through a little gate and you'd go to the broker, sit down at his desk. You might be in a little office, but likely you'd be just in a classroom setting with desks and desks and desks and desks. And you're just sitting in a little chair beside the desk, and you're talking to your broker about what you're thinking of doing. And you read in the paper, the New York Times, or whatever paper was provided, or whatever paper you're reading, Wall Street Journal, whatever, that IBM sales look very good, and you want to buy some stock in IBM. And you tell your broker, I want to buy 100 shares of IBM today. I see it going across the ticker at 23 3/4. I want to buy it at 23 3/4, and the broker would write a blue ticket, a buy ticket, to buy 100 IBM at 23 3/4. Now, if you had the money in your account already, no problem. If you didn't have the money in your account, no problem. The broker had to make the decision on the spot whether or not to buy the shares for you, and you had 5 business days or a week to bring in the money. Of course, you'd bring in the money if you bought the stock. If you didn't get the stock, if it ran away on you, you didn't have to bring in the money. Now, depending on your history with the broker and the firm would extend you margin where you only had to put up half the money, and they'd put up the other half if you wanted to do that, up to that amount. Or you could pay for the full amount. The broker would then take the ticket and walk the ticket to the trading desk, which would be a trading room. And in that trading room were the telegraph machines, the teletype machines, the phones, the desk traders. And they would get the ticket, they'd stamp it, and the broker would keep one copy of the ticket for himself. Two copies would go to the desk trader. The desk trader would now phone in the order or teletype in the order to New York, in this case, IBM. The floor runner on the phone operator on the floor in New York likely would pick up the call, unless this is a branch office, and then this desk trader called the head desk trader in New York, that desk, to put in the order. And those guys would just say, hang on a sec, and they grab up the other phone right to the floor of the exchange, talk to the phone guy, their phone boy, and say, want to buy 100 IBM at 25 3/4. All the while, the desk traders know exactly what the stock is trading at, because they're now watching the quote on the stock. They know that this order is right at market. The phone runner would write the ticket out, hand it to the floor runner, who would then run the ticket, the buy order, to the floor trader, who would then be standing around 25 other floor traders at the IBM post, among other stocks on this one post. IBM would be trading here, and he would get an order to buy 100 IBM at 25 3/4. He would look up at the post and see that the market is 25 3/4 to 7/8, or 25 5/8 to 3/4. And if it was 25 5/8 to 3/4, he would yell out, bought 100 IBM at 25 3/4. And brokers would yell out, sold. Traders would yell out, sold. If there's only one seller, that seller would get the 100 off. If there were 5 sellers, each guy would get off 20 shares as a partial fill. It varied. If it was a market buy order, he would just yell out, bought 100 IBM, and they'd yell out, sold 25 3/4. Sell 100 25 3/4. In any event, the two brokers, let's say 2 traders, 2 floor traders, would then fill out each other's tickets. The one had an order to sell, the other guy has an order to buy. They fill out their orders. Each guy initials the other guy's little ticket, and that way, that's a done deal. That is a contract between 2 brokerage firms. One is on the hook to deliver the stock. The other one's on the hook to buy it a week from today. And now the reverse happens. The floor runner gets the fill. He runs it back to the phone guy, who calls the desk trader. You're filled. Who calls the desk trader at the branch. You're filled 25 3/4 on your IBM. And then the desk trader fills out the blue ticket, timestamps it again with that's now the fill time. It was the first time is when the order was entered. The second time that was stamped is the time the order was completed. And then the ticket is again ripped in half, or the copy is separated, and the master copy is held by the desk trader and the firm, and the copy is in a little round hole for the broker. And the desk trader yells out, Bruce! And Bruce looks up, and the desk trader, you got a refill. So the broker would say to the client, I'll be right back, and then go up to the desk trader, get the slip of paper, the blue one, and come back to the desk and say, you got your 100 shares at 25 3/4. Let's hope it goes to $35. And the client say, thanks very much. I'll have your dough here by next week. Perfect, no problem. And then the client would sit down back in the lobby area and just watch the market for the rest of the day, or however long they wanted. And in those days, smoking was allowed inside the office. So all the brokers are smoking. All the desk traders are smoking. Paper everywhere. And the clients are smoking in the waiting room, watching the theatrics, and talking to each other, and sharing cigars and telling stories. And if you were retired in those days, and you were handing out, holding court a little bit there, it would not be unusual, absolutely not unusual, where in the morning you would you would be you get up in the morning, and you and your wife would have a little breakfast together, and your wife would say, I'm going to go play cards over at Betty's house, and then I'm going to go see so and so. What are you doing today? And Grandpa says, I'm heading down to the market. I got to see Bruce the broker, and then I'm going to meet Johnny over at the track. Oh, great! So off the two go and have their day, and down to the brokerage office goes Grandpa to do what he was doing, and kibitz with his buddies, and he meets up with his pal at the brokerage office, and then they take the subway or the trolley or their car, and they go to the track after the market. And so they're gambling in the market. Now they're gambling on the horsies. And then they're coming back to the house in the afternoon. And Grandma's there, and she's warmed up leftovers from last night. And Grandma and Grandpa having something to eat. And then they're watching a little bit of Milton Berle on television in 1952. And there's your day. That's how it was. It's kind of changed, huh? Now you can bet on horses from your house. You can bet on stocks from your house. You don't need to talk to a broker. You don't need to meet up with your buddy. It's a lot quicker, and you get to watch your buddy Uncle Bruce here on this channel to do your thing. It's all different. What can I say? Welcome to the modern world versus what the modern world was like in 1953, 1958, 1962. Right up until when I entered the business in 1979 in downtown Calgary, there was a branch office for Merrill Lynch Canada, because Merrill Lynch had a Canadian operation, Merrill Lynch Canada. And they had Merrill Lynch offices across probably 25 offices in Canada, 25 offices at most major cities. In Toronto, there'd be several, more than one. But there was one in downtown Calgary, and you came in the front door of that place. Of course, in Calgary, you have winter weather. So what happens is you come in the front door, and then you're inside kind of a cubicle. It's kind of like a 10 by 6 foot little anteroom with a carpet on the floor for you to stamp off your boots to get the snow off, rub your feet. It usually would be wet by now. Then you open the second door, because the first door would close. You open the second door, and that got you inside the office. And there was another carpet on the floor there. Again, one of these, every day they were replaced carpets. And you stamp your feet in there and wipe so you didn't want to track water everywhere as the snow melted off your boots or shoes. And now you're inside the lobby, and here were 2 or 3 rows of theater seats with guys with the fedoras and their cigars, or pipes, because this is 79, you can still smoke. And the brokers, the investors, these guys, almost all male, no female to be seen anywhere except the secretaries of the firm and whatever. It's all male, all male. The guys, the veterans, they have their favorite seats. No one sits in the third seat on the front row. That's Johnny's seat. The aisle seat over here, that's Barry's seat. You have to understand the lay of the land. You're a newbie, you better figure out where you're allowed to sit and not sit. The biggest clients got the best seats. And there was an unwritten rule: you never sit in a seat that was of someone else. If that person was there, you don't sit in that seat. But they had, I don't know if you remember these, some of you might be old enough to remember this, but do you remember that used to get a newspaper when there used to be full-size newspapers, and you used to have these bamboo sticks, these long bamboo sticks. They'd be about 3 feet high, 3 feet long, 4 feet long. And they would have a split in them. There would be a split, and what you did was you slid the bamboo stick along the crease of the newspaper in the middle of the 2 big pages, and you then held the stick with one hand and you held the paper with the other. Instead of having the double page, you had a single page folded backwards with the stick as the spine of the book of the spine of the paper. And these bamboo sticks with the papers in them would be hanging on the wall on hooks. So when you came in, you'd see 10 newspapers hanging off the wall, off the side of the seating area, and the end of the bamboo stick that would be sticking out of the bottom and the top of the newspaper would be about 6 inches. That's where the hook was to hold the stick up horizontally. And you could see by the header of the newspaper what paper it was. So in Calgary, we saw the Calgary Herald, we saw the Globe and Mail from Toronto, a national paper. We saw the Financial Times, the Wall Street Journal, whatever publications that were brought in by Merrill. And Merrill Lynch, being a national firm with a U.S. base, had all the best stuff. They had all the top publications. Every day's copy of the papers were there. And if they were all used up, you could see in the theater area these guys smoking their cigars, reading their paper. And then when they were done, they would put the paper up on the horizontal hook over there. And you go over there and grab one yourself and have a seat. Figure out what's going on. Get yourself educated with what's happening in the world today, because there was no Uncle Bruce on YouTube to hang out with in the morning at 8:30 on a Tuesday morning. Oh, the old days. Oh, the smells of the cigarettes and the tobacco and the cigars. The atmosphere, the subdued atmosphere, the drone of phones ringing and guys talking and yelling in the big room ahead of you. It's a giant, long classroom with a 20-foot high ceiling main floor, and at the very front would be the tickers going across. And below the tickers would be in a kind of a glass cage area would be the desk traders. And there would be screaming and yelling and heads ups and people coming and going. Action Central. It was a nerve center of finance. And you saw a part of the market there, that part of the market. What you didn't see was the floor. That was a whole other world, the stock exchange floor. Anyway, I've done it all. I've seen it all. And kind of miss those days. I certainly miss those early days when you could walk into the office, and if oil was up substantially, or gold was up, or there was an event, something was going on, interest rates were, the room would change, the buzz would change, especially when markets were falling. When markets were under pressure, the phones are ringing off the hook. Customers were wondering what's going on. And the brokers' emotions were higher and higher. And every once in a while, you'd see a broker screaming into the phone and slamming the phone down, be pissed off to the nth degree for whatever reason. He's upset with a client, upset with another firm, he's upset with his office, whoever he's talking to, it didn't go well. And these guys would walk around with their hands on their hips and just try to calm the hell down. And the phone is ringing again. The guy's got to pick up the phone again. It's still ringing. There's 6 lines waiting. The markets are off. Those are the days where you saw the raw emotion of the market firsthand, live in front of you, happening in front with 30 brokers sitting there, each guy with 5 lines lit up, and assistants saying, Charlie's on line 6, Bobby's on line 2, so-and-so's on line 1. These are the top clients, and these guys had to pick up the phone as quick as they could to get to their best clients, and then calm everything down or explain what the hell is going on, because there's something on the radio, there's something on TV, whatever's happening. Yeah, you don't see that anymore. You don't get to see that anymore. You don't get to go into a brokerage office. There's no such thing as a brokerage office. It's now all with us here, or you watch on CNBC and try to understand what's happening when the markets are down 800 points. What's going on? Good luck. Those folks are reporters. They're not brokers. They've never been a broker. They've never had a client. They wouldn't know how to fill in a buy order ticket if their life depended on it. And let me tell you, when you have to write a ticket and the markets are shaky, like when the markets are really scary and you're having a real tough day, you're nervous. You're trying to control your emotions, and you have to fill in a buy order or sell order on behalf of a client. I remember days, my younger brokers, the less experienced ones, their hands were shaking. They were terrified of what was going on with the markets. and they were worried about losing all their clients and losing all their clients' money and all this stuff. And so here they are writing orders, and I would try to be the calming influence, the broker's broker, is what I tried to be as branch manager. And I just put my hand on their shoulder, say, just take your time. You're going to be all right. You're going to be fine. We'll take care of you. Don't worry about it. And they had to make sure the account number was correct, and they all the details were correct, and all this. And then the desk trader would get the order, and I would have a private little phone call to the desk trader on my phone from my office to the phone of the desk trader. Nobody knew I was talking to the desk trader, and I would say, "Look, broker so and so, broker so and so, broker so. These guys are under real pressure today, so double check their tickets. Just make sure they filled it in right. Make sure that they're not selling 10,000 shares when they should be selling 1,000 shares. Make sure that they're giving you the right color of ticket, because sometimes they put a blue ticket in to sell and a pink ticket in to buy because they're just so frazzled. Keep an eye on them." And the desk trader is a broker's broker as well. A desk trader is very adept at handling the pressure, and it can calm down when it gets crazier. And they're like Uncle Bruce's. And desk traders can get really nasty and can be the worst. Oh God, they can be all over you in a New York minute if you screw up, if you're incompetent or if you're not paying attention. But if you are a rookie and you're young and you're also respectful, these guys are your best friend. These desk traders can save your butt. And there are times where a broker will put in an order and they would buy stock when they were supposed to sell stock. And then 5 minutes later, they find out, oh God, I bought it. I was supposed to sell it. And then they go back to the desk trader. Oh, I screwed up. And the desk trader said, just give me that ticket back. Give me. And then he'd call the floor and they'd work it out. So, and they'd cancel trades. They would cancel trades. And brokerage firms would say to brokerage firms, I owe you one. You owe me one. We're keeping score. We have favors over the years. We all screw up and we all cover each other, because at the end of the day, the brokerage community is on the hook for their clients' actions. If you give a broker an order to buy stock and don't pay, the broker has to pay, because settlement is settlement no matter what. The brokerage firm is actually taking the risk for you. If you don't pay the broker, the firm is on the line. It's their money. The firm will go after the broker. It's their butt. But if it's a large order and the broker makes $60,000 a year and this is a $100,000 order, and there's a $20,000 loss here because stock was bought and it went down and the client never paid, the broker's on the hook for 20 big ones. He only makes $60,000 a year before tax. He clears $35,000, $40,000 after tax. What are we going to do? Charge this guy 20 grand in 1 month? He doesn't make that kind of money. We're going to charge him $1,000 a month for 20 months. Just guess how motivated this guy is to come in the office every day, knowing that the first 1,000 he clears, he doesn't get. There would be arrangements made as best as possible. But there were times where losses were so great that brokers had to walk. They'd be gone. And the firm would eat the 20 grand. And it's an expensive business. So firms would look after firms because customers' funds were always covered. Just because I bought stock from your brokerage firm and my client didn't pay, you don't care. I paid you for that stock. That firm is covered on the other end. Firms between firms are covered. Your clients are your clients. My clients are my clients. You have your nightmares. I have my nightmares. There it is. And at the end of the day, brokerage firms covered all losses on behalf of their clients so that all of their clients were constantly protected and insured for their investments. It was a whole different world at that time. Know your client rule was the number one rule that we had to understand. So when a client called me up and said, I want to buy 50 grand worth of this stock, I'd have to say, Bobby, you only got 10 grand worth of stock here. Where are you getting this dough from? Can you walk in a check today? Can you walk in a certified check today for 30 grand? I'll cover the other 20. We'll get off you next week. But can you assure us that this is, going to be covered? Because what we don't want is you buying 50 grand worth of stock today and trying to sell it tomorrow for 55,000, not pay us and get the 5 grand profit. You're just trying to do a flip without paying for it. That's no good. That's verboten. And I had to always step in the middle of trades with my younger brokers who would where clients try to take advantage of these guys, this kind of stuff. Anyway, I go down memory lane today. Thank you for joining me. At the moment, we have a 356 point gain on the Dow in the pre-market, and we're up 57 on the S&P. We're up 253 on NASDAQ. On a percentage basis, NASDAQ is up 1.78%. The S&P looks like it's up 1.3%, and the Dow at 1% gain. The one commodity that we're watching the most closest, I am watching the closest, is oil. Oil right now is down 223 a barrel, which is nice, but the bad news is oil was down 350 a barrel an hour ago, and oil has recovered $1, and I don't like it. This is bothering me. As an old man, I don't want to see oil recovering before the markets are even open, because oil had dropped down to 91.92 a barrel, and it's now 93.26 a barrel. So actually, it's more than $1. I don't like seeing it here already. The price was 95 a barrel in the pre-market this morning, and it's coming back up, and that means the news that caused the futures to do what they're doing. And by the by, the Dow was up 450 points earlier today. It's now up 360. It also is giving up some of this real nice green juice we were looking at this morning. The reason the markets were higher on the futures and oil was lower was because the Ukraine situation seemed to be easing up just a little bit. The first sign of easing off might have been witnessed. The problem with this is what we're finding out is the market is desperate, has been desperate for any positive news out of Ukraine, anything. And yesterday we got a sliver of positive news when on television, Putin and his Secretary of State sat in front of the cameras on a staged little thing. And Putin asked his Secretary of State, what should we do about Ukraine? And he said, I think we should keep negotiating because diplomacy is, there's still a lot of room in the diplomatic side of things rather than send troops over there. And Putin went, okay, that sounds good to me. The market loved that. Well, now overnight we find out that there's a story coming out that came through the press that said that Russian troops somewhere, somehow, were being pulled back to their bases. The interpretation of that was, oh, the Russian troops are being pulled away from the front line of the Ukraine back to their bases. And the markets just went straight up. A relief rally like you can't believe. Not true. NATO is saying, no. There are Russian troops moving. There are a lot of Russian troops moving. There are Russian warships moving. There are tanks. There are trains. There are camps. There's 130,000 on the front line of the border. There are Russian troops in Belarus doing military exercises with Belarusian forces, and they're all over the place. Ukraine is surrounded on three sides by Russian troops. The moment Putin says move, within an hour, they're 50 miles in on each side. Within 2 days to 4 days, Kiev will be totally surrounded with no way out for anyone by land. No way in, no way out. The Russian anti-aircraft missiles will be established all around Kiev. No commercial flights in, no commercial flights out. That's it for Ukraine's capital within days. The Pentagon knows it. NATO knows it. Russia knows it. No surprise. The question, of course, is it worth Russia's bottom line, dollar-wise, to do this? Because the threats have been from the West, make a move, and we are going to cut you off, and it's going to be expensive. So when we heard this morning that Russian troops might be moving back to some bases, the clarification came out from NATO saying what we think is happening is there might be some Russian forces that were involved in military exercises moving back to bases, not the frontline troops surrounding Ukraine on all three sides. now the interpretation is, yeah, but that's the beginning and that's a sign, and it looks like that's what he would rather do, and so the markets are up, but not as up as they were, and this is worrying me, or kind of motivating me in a way, where I want to say to you, we may have a nice start to the day that won't last long. How about that? We might be up for the first hour, but we might be waning very quickly after that. And so, you option writers out there, you option writers might be able to take advantage of the upsurge on some stocks, write contracts, sit with your arms folded, and this afternoon pick them back up for cheap. You might have a nice day trade on your hands on a dead cat rally, a little relief rally that's going to peter out later today. What I do not expect to happen all day long are agreement after agreement after agreement between the Russians, the Americans, the Germans, and NATO that everything is fine, there will be no problems, and the Russian troops are going back home. That ain't going to happen at all, because the Russians haven't got diddly squat yet for what they want. What they want deep down, when it comes down to it, is they want anti aircraft missile systems pulled back in NATO countries. They want short-term, medium-term nuclear weaponry to be eliminated or pulled back. They want to negotiate a more of a security arrangement. This stuff takes years. The stuff they want is going to take years to work out, if it works out at all. And they also want to put the message out to all of the states, these countries that are on the eastern side of Europe, that are thinking of becoming part of NATO. In other words, they want to move more to the west rather than towards Moscow. Moscow's saying, no, we're not interested in that. We don't want every single country that we're up against, that we're bordering, to become a westernized country. That's the last thing we need here in Russia, because now we have 15 more countries that are now going to be democracies, and they're going to criticize everything we do. Because here in Russia, we got a good thing going. I mean, Putin's been in power since the 90s, and every time there's an election, it seems that the year before the election and the election itself, whatever opposition members ever want to run against him find themselves poisoned to death, or they find themselves in jail for corruption. And this is a good gig, because when you have an election and your opponent is automatically disqualified from running because he's a criminal and he's a hooligan and he's a spy for foreign countries, it makes it very easy to win elections time and time again, especially if the public gets sucked into believing that you're the real deal and these guys are imposters. And so why would you want to change politically anything if you can count on the strong man being in power, is always going to be in power? And if you are loyal to this guy, you and your family and your relatives will all have cushy jobs within the system. You'll always have no problem getting your car insurance renewed. You have no trouble getting your licensing done. No issues with importing goods from overseas. Customs never bothers you guys. You never seem to have an audit with the tax man. Life is good. Everything's fine. Why would we change any of this for the uncertainty of, well, the friends of the other guy are now going to get all the cushy jobs and we're all going to get laid off? You don't want that. So you want to keep this game going as long as possible. And hey, Putin's a young 70-something-year-old guy. He's got another 10, 15 years in him. No problem. The fact that he's supposed to only have 1 or 2 terms 3 terms ago, those are semantics. Let's not get into details. Welcome to 2022, kids. We're up 343 points on the Dow, 53 on S&P, 230 points on NASDAQ at the moment. Oil is showing 92.93, down 253 a barrel at this moment. So far, so good. We'll have to see just kind of where things are at. I just noticed a headline here I find interesting. I know Kohl's, the department store Kohl's, they have been pressured by activist investors to make moves to get their stocks trading at a higher level. And for 2 years, activist investors have been pushing the Kohl's management to change their ways to make the stock more attractive to the street. And Kohl's management has been reluctant to give in to groups that collectively own 1% of the company, 2% of the company. They don't consider them all that serious. Um, and up until about a month ago, a group of activist investors mounted a challenge and a takeover offer of Kohl's. They came in with an offer to buy it, and Kohl's directors just said, "No, we're not interested in selling the company at any time." And then the company turned around and adopted what's called a poison pill, so that it became extremely more difficult and expensive to take out Kohl's um, as a takeover. And all of a sudden, that's a negative for the stock, because all of a sudden the stock is off the takeover market. But I noticed right now, I've heard this earlier this morning, Kohl's has announced that they're going to add 400 Sephora makeup stores inside their department stores. 400 additional Sephoras are going to be inside Kohl's. Sephora, for those of you who do not know, if you're a male, you have no idea what women's makeup is all about. If you're a female, you know what I'm talking about, but if you're a male, you're clueless. Sephora is a makeup center that has upended the makeup business, and they have opened up independent locations in shopping malls where women walk in from teenage to age 10 and up, if even maybe even younger with their mothers, where they come in and they get serviced to death by the staff inside Sephora. Sephora staff are made up of the demographic of their customer, and they are very well aware of the products they carry. But they carry certain brands only, and they have very high margins, and they do a very, very strong loyalty program for the clientele, and they also do an incredibly strong online advertising program, constant online marketing. And these young gals, starting at age 10, 12, 14, 16, they have their phones in one hand and they have their purses on their shoulder on the other, and they're coming in to look at product from Sephora, and they're constantly being bombarded on their phones, on their Instagram account, their Facebook pages, whatever they're doing, TikTok, you name it. They're constantly exposed to Sephora brands, and there are young gals who have YouTube pages and TikTok accounts and Instagram accounts where they promote and show off how great the Sephora product is. It's kind of like for guys. There are guys who talk about Teslas all the time, and they do videos about how great Teslas are. They take you in there, they put cameras in the cars, and they go drive them, and then they show you the computers, and they walk around the car. And any new development on Tesla, there are probably 36 channels on YouTube, at least, that can tell you every little thing that's going on with Tesla right now and what's going to happen and so on. Any rumor. Well, there's dozens and dozens of young women who have YouTube pages and other online pages for Sephora, and they promote Sephora brands like you cannot believe, and they have a following you cannot fathom. It's incredible. So with Kohl's adding 400 Sephora retail locations inside their department stores, this is a big deal, and this is going to dramatically change the dynamic inside Kohl's, because the old school way of doing it is as if you were a child and you went with your mother to a department store back in the 70s, 80s, 90s, 2000s, your mom and you would walk into a department store, whether it was a J.C. Penney, a Marshall's, a Macy's, it didn't matter what it was. The main floor, the front of the store, the main floor, right now, cosmetics, right now. And it used to be all cosmetic counters with women behind the counters to sell to women. But they carried everything. They carried it all. And the department stores are constantly pushed and approached by all the brands to carry their brands. And they would also have seminars within the stores to train up their staffs to sell the latest Chanel whatever or the latest whatever makeup line. Now all that is done by Sephora. Sephora trains their staff in cooperation with these brands. But they carry certain brands only, not every single brand out there. not every single brand. They are very specific. And Sephora runs it with military precision and military ordering precision so that the inventory in stock is fresh inventory, and is the hottest inventory that the market wants. They are in tuned to the social media world as to what the women want, what the girls want, because in reality, the biggest buyer of cosmetics are under 40. The ones with the most money are over 40, but the ones who buy the most and most frequently go in are the kids, the young gals who are 14 to 18 to 24 and so on. Anyway, good move on Cole's part. I just mentioned that this morning as a little side note. My daughter, who's 33, is a Sephora customer, and I have been in Sephora's with her, and I watch her. I stand to the side and I observe, watching my daughter, who knows exactly what she wants and how she likes it. And then I watch her get approached by Sephora staff, and she loves it. She loves being approached by the staff because they know what they're talking about. And then they go for a little walk together. And inevitably, she comes back to the cash register with a little more than what she thought she was going to get. And then they throw her, they shower her with discounts and free samples and all kinds of promotions. It's a love relationship, an absolute adore each other relationship. And I've been watching this since she graduated school, and even before she graduated her through university. But even in high school, she was in there, and she used to need money from mom and dad to be able to buy from there. But now she makes so much money on her own, she doesn't need mom and dad's help to buy anything she wants at Sephora, because she's done well for herself. But it's really intriguing to watch the core demographic of that company. When my daughter walks in that door, that is the customer they dream of, a young woman making good cash who can buy anything she wants anytime she wants it. Oh, do they live for this gal to walk through the front door? Oh, yes. And it's almost like the sensors go off the minute she walks in the door. It's kind of like they know. I don't know how they know. They just know. Very interesting. Anyway, there you go. Thank you, everybody, for being here this morning. I'm going all over the map today, talking about old brokerage days, and Sephora makeup stores, and whatever else. Watching our favorite stocks. Let me take a look at some pre-market trades. We are now, what are we at, 16 minutes away from opening here. Rocket Lab was down 15 cents yesterday. We're up 34 cents in the pre-market, now at 9.82. SoFi was down 40 cents yesterday at 12 bucks. It's now 12.29, up 28 cents or so, 29 cents. GameStop closed last night at 117.09 on the actual market. In the pre-market right now, I'm showing it at 119.93. I've seen it as high as 121, something like that, but it's right now 119.93, up 284. Matterport was down 19 cents yesterday. It's up 28 in the pre-market. 23andMe was down 3 cents during the day yesterday. It's up 18 right now to 467, but it still needs 33 cents to get back to $5. Spire is at 309, up 5 cents on the morning. I was down 21 yesterday. And ATIP was down a dime yesterday. It's up 8 cents now. SmartRent was up 3 cents yesterday. It's up 28 right now to $9 even. SmartRent got an analyst coverage today. Apparently Morgan Stanley is now covering SmartRent. However, they only gave it an equal weight rating, which is like a hold, and a $9 target price, which is exactly where the stock is right now. So they're not giving it a boost at all. It did get an upgrade yesterday to with a $16 price target, but today just a $9 price target. Sextera has not changed. It's 11.28 from yesterday. Apple is up 223 to 171.14. Goldman Sachs is up 275 to 362.99. We have Cisco up 57 cents to 53.75. Tesla's up 23.65 in the pre-market to 8.99. We got Peloton up 56 cents to 33.40. That's come off a ways. And ARC Innovation, the Kathy Woods disruptor ETF, up $1.76, 73.15. It's up 2.5% in the pre-market. That's what we have so far this morning, and we're watching the markets, interest rates, inflation. There's an inflation report due this morning. It is a wholesale inflation report that should be coming out. So that's what factories are paying and distribution centers are paying for goods. Wholesale inflation numbers are important because if they pay more, we end up paying more when they pass on the price increases to us. So if a wholesaler brings in merchandise and it costs them more, they will mark it up to the retailer, who will mark it up to us. And unfortunately, if you have a 4% increase in inflation at the wholesale level, it means, unfortunately, we're going to probably have 50% higher inflation problem for us. So 4% wholesale could mean 6% retail, because it's markup, it's margins on markup, and not good at all. We'll watch for that. That comes out, I think, in 13 minutes unless it's already come out. Maybe I'm incorrect. Maybe that news is already out. That may have come out at 8:30, but I don't see it anywhere here. Let me double check something. Let me double check over here. Did that show off already? Dow future surge. Yeah. We're watching a lot of different stories today here. Okay, no, still don't see it. I don't know if this has come out yet or if this is about to come out. So sorry about that, folks. Normally I know this info, but here, let's see, is this correct? Hang on, I think I found something. U.S. wholesale inflation surges again in sign of still intense price pressures. Producer price jumps 1% in January. Here we go. This came out. About what would this be? 8:55 Eastern time and 8:37 Eastern time. U.S. wholesale prices jumped 1% in January and showed there's still plenty of inflation bubbling up in an economy facing its worst cost pressures in 4 decades. The uptick in wholesale prices blew past investor expectations. Wall Street economists had forecast a 0.5% increase. Wholesale prices reflect what businesses pay for supplies such as grains, metals, lumber, packaging, computer chips, and so forth. Don't forget that part. When companies pay higher prices, the cost is often passed on to consumers and contributes to inflation. Americans are paying sharply higher prices now than they were a year ago for most staples. The increase in wholesale prices over the past year, meanwhile, slowed a tick to 9.7 from 9.8%. Still, it's the biggest advance in the index since it was configured. Since what was this? Since one of the highest rates since 1980s. Okay. There you go. So there you are. That came out already. Okay. There you have it. And I'm really not surprised at that myself, but there it was. It is out, and it is now officially out as of a little while ago. The market right now, with 10 minutes to go before we open for trading, we have the Dow up 333 points. We have S&P up 52. We have NASDAQ up 229. And oil is now down a little further, and this is good news, down $3.38 a barrel to $92.08. This is good. If oil stays down here and stays below 93 into the 92, 91 level, that is good on multiple fronts, including inflation. So we'll hope for that, okay? Oh, excuse me. There you go. Welcome all to the show. It's nice to have you here. Nice to see you here. Good to have you coming through. Brittany, you get better. You take care of yourself and you get better. Thank you so much for this donation. I really appreciate it. You take it easy and do what the doctor says. And I hope you get better real soon. Thank you for popping in to see us today. Those of you who are here, you're wondering what to trade today. I'm mentioning that the trades of the day could be that you're writing calls this morning to buy them back this afternoon. What we're looking for is a bit of a pop this morning. I don't know how long and how sustained the pop up will be, but it could well be that some of you might notice some of your shares will surge a little bit. Some of the stocks that you like to write options against, like Goldman Sachs, Cisco, Apple, might move up a little bit for you, giving you an opportunity to write an out of the money call. And You might be turning around, writing calls for this Friday, turning around and buying them back later today for 20% less, 40% less, 60% less, whatever the trade gives you. The market will tell you. Um, on the GameStop and AMC front, we're going to have to see how these two want to handle the market this morning. We've got GameStop up 261 right now to 119.70. 22,000 traded in the pre-market, which is, very telling. That is very telling in not a good way. We have this light volume going on. It's not what you want to see for a big upsurge to start the day. Um, but it tells me that those of you who have written contracts against GameStop, you have very little to fear. I don't think you have a lot to worry about because it looks like another relief rally only going on. Not too much. Now, on AMC, which can move GameStop, as we are aware, we have had 530,000 shares trade so far, not even just over 500,000. That's light. We are at 1826, and we are up 50 cents on the day. But earlier in the morning, we were at 820, 821, 825, something like that, and the shares did pop to what, 840 briefly, but couldn't hold it, and have now backed off to this 825 level, back to the 820 level. Sorry, 1820 level, 1820. So from 1845 back to 1820.25, we're up 50 cents, but we're actually lower now than we've been all pre-market. The early part of the pre-market, these shares were 1830 to 35. Now they seem to be in this 1820.25 neighborhood. So we'll watch that, as we always do. We'll watch it closely and see how it performs. Like I said, GameStop closed last night at 117.09. It is now 119.82. We have 7 minutes to go before we open for the day. Now, I'm going to do something at this moment of time that I have not done ever before on this show. It's not all exciting, and it's nothing to worry about, but I must excuse myself to take care of a bodily function, and I will leave you with a photo while I'm doing this bodily function that will not last too long. Here's a lovely shot of Palm Desert, California, where we're hanging out right now, and I will be back in just a moment. So do not go anywhere, and we're ready to open in 6 minutes. I can't wait, so hang tough. We shall see you shortly. And we're back. I hope you didn't miss me too much. I missed you all terribly, but just for a moment. We're back to get ready for the opening, and we feel a lot better now. I was so busy this morning looking up info that I actually forgot. It was usually with about 10 minutes to go before I start. I take care of these little events so that I don't have to worry about it when I'm on the air. But forgot the 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 pressures weren't mounting 30 minutes ago, but they were mounting now. I'm back, so thank you, everybody. Anyway, there it is. We are keeping an eye on these markets right now. 293 is the upside on the Dow. This is bugging me. Uh, I wasn't expecting the market to be up 600 points, on this news that we got today from this possible Russian redeployment of troops. This is more of a fake out as far as I'm concerned. So when we were up 450 this morning on the Dow, and now we're up 297, this doesn't surprise me. What I'm looking for is there an opportunity for you folks out there to be able to take advantage of this pop, to be able to get off some options, to be able to buy options back later today at a lower price, because this cannot hold, in my humble opinion. Oil, I'm happy to report, is still down $3.39 a barrel, which is great. That's $92. But I also suspect that oil might be back to 93, 94 later today, because the shift will now go to inflation. We'll turn our attention from Ukraine to inflation and higher interest rates. However, at the moment, the Ukraine thing is the dominant area. It's the dominant story that the administration wants to talk about. The administration does not want to talk about domestic economics. They don't want to talk about inflation right now. They don't want to talk about high oil and gas prices. They don't want to talk about the lack of activity in the Congress and the Senate. They don't want to talk about lack of cooperation with all this. They don't want to talk about midterms. So let's talk about Ukraine, and let's just talk about Ukraine, Ukraine, Ukraine. And of course, Ukrainians are going, stop talking about us. Stop the talk. We don't like all this talk. We don't want to be the center of attention of the world. Don't give this guy any ideas. And anyway, so that's what's going on. Sometimes certain people will use diversions to deflect the attention span of voters away from certain issues they don't want to talk about. Now, I heard a story this morning that just typifies what's been going on and what is just under the surface of people in Washington, certain people in Washington. There is strong indications that an idea is being floated about to suspend the gas tax on U.S. fuel, which is 18 cents a gallon, by the way. That's all it is. The federal excise tax on fuel in the United States of America from the federal government is a paltry 18 cents a gallon. Hasn't been increased since 1993. Do you pay bills today that are still the same from 1993? There is nobody in the U.S. that pays anything from 1993, except U.S. taxpayers are paying the same tax in cents for a gallon of gas, 18 cents. This is supposed to keep your highways running efficiently, repair all your bridges, build new interchanges, expand the highway system. This is a disgrace, a national disgrace. The American tax, if it were inflation related, would now be 70 cents a gallon. The talk is they're going to eliminate it. They're going to suspend it for a while to bring the price down 18 cents a gallon, which you will not get. I can guarantee you, if you're an American watching me right now, I'm telling you straight out, and you have to know this. You have to know that if the federal government were to not charge 18 cents a gallon tax to you, you're not going to save 18 cents a gallon. You'll save a dime, because guess who's going to take the 8 cents remaining? And I don't even have to tell you who it is. You all know. You all know. Larry, thank you for ringing the bell. Thank you, buddy. Appreciate this. As always, we're open for trading now. And I wanted to leave you on that little note about the gas tax. This is being talked about in Washington. It is actually being talked about seriously because the administration wants a positive. They want to in any way possible lower the cost of gasoline to the American consumer. Environmental groups are going, what the hell are you guys doing? It's encouraging the fossil fuel business with an 18-cent a gallon incentive. That's it. We're talking $4 a gallon gas, $4.50, $5 a gallon gas. I've said it here to you straight out. You want to change your life and you want to change your country's direction and want to make America stronger, a more tougher country. Each of you use 1 gallon of gas less a day. That's all you got to do. Just use 1 gallon each less a day across the USA. America's dollar will surge. Prices of oil will collapse. Mideast will be in turmoil because of the lack of expected money coming in. The Russians will be just scrambling to pay their bills because oil will go to $50 a barrel. And you guys will have $2 gas, all you want. And if you use less again, you'll crush them even more and make America the strongest country on earth without any competition. So simple. It really is easy. I don't know. Anyway, that's just me, though. I'm an old man. I got the face for radio, so I'm sorry if I make you mad. But oh my God, welcome to the show. Welcome to the training of the markets. Let's take a look at how we're doing here as we fire everything up right now. See if I can get my big ass iPad to work for me this morning. I'm showing GameStop up right now, $1.20. At $120 a share, I should say, 120.60, up 351. I've got the Dow right now up 365 points, so it's a nice relief rally. It's a nice bounce. I just wonder if we're going to start high and slip as the day goes on. That's what I worry about with this market. The S&P is up 50, and the Nasdaq is up 222 points. And I've got Rocket Lab up 34 cents at 982. I see SoFi at 12.39, up 39 cents. GameStop, like I said, 120.83, up 374. That is not enough of a bounce. AMC up 73 cents to 18.48. That was almost a $22 stock 4 days ago. Matterport 803 up 35 cents. ME at 458 only up 9. That's not good enough. Spire 308 up 4 cents. ATIP up a dime at 280. SmartRent up 11 at 882, and Cyxtera at 1141 up 13 cents. It's green everywhere. I'm not arguing that. I'm not trying to hide that. It's green, but it's not green enough. We're up 394 on the Dow, now up 406. We're up 53 on S&P, 226 on the NASDAQ. NASDAQ is the winner with a 1.64% increase, just over 1.5%. S&P is up 1.25. Dow is up 1.1. That's where we're at there. Over on CNBC, I'll see if I can show up the VIX, see if we can find it. We've got the VIX right now down 2.16. That's positive because the fear index is at 26.17. That's positive. But we were at 20 on the fear index 4 days ago. So we're still elevated on that. We'll watch that out of the corner of our eye. Also, Russell 2000 is negative 9.3 points. That's not good. That is showing me we don't have uniform buy spree everywhere. We have it concentrated right now. And I have a suspicion that the concentrated buy love fest is with the big cap stocks. I'm showing Robinhood up 29 cents. I've got Vanik up 680 a share. That's the ETF computers guys. Chip makers, Home Depot up 547. That's a Dow component. IBM up $1.20. Dow component. Microsoft up 532. Dow component. Apple up $2. Dow component. Goldman up $5. Dow component. Heard of this before? Cisco up 68 cents. Facebook up $2. Amazon up $39. Tesla's up $29. Google up 44. These are all the big boys. They're all higher, pants on fire. Royal Caribbean up $2.90 a share at 85.65 a share. Target up 78 cents. JP Morgan up 240. Costco up 771. Walmart up 163. Nvidia up 764. Again, all big cap companies. Disney up 320. Another Dow 30. We'll watch, see how this all plays out. Moderna up 369 to 146. Man, that stock just cannot get traction anywhere. We're up $7 on Boeing today. Relief rally everywhere. The Dow right now, 420 points to the upside, and 990 on Rocket Lab. Maybe we see a $10 print. SoFi 1227, a long way from where we should be here. GameStop now up 353, 120.62. GameStop volume 110,000. That's not good. That's incredibly light. The low 120, the high 120, 195. About a $2 spread between low and high. We're at 120.23. We're closer to the low of the day on GameStop than the high. On AMC 1836, we're up 61 cents. The high was 1853. We're now 1839. The low 1805. 2.8 million volume. That's not good. This should be 10 million. If this were euphoric, yeah, we're going higher buying. We'd be at 10 million shares. We're at 2.8 million. This, as an old desk trader, nope, that's not happening. Matterport up 36 cents to 804. ME up 11 to 460. Nowhere near $5. Spire up a nickel at 309. Not good enough. ATIP up 11 and SmartRent up 28. Cyxtera up 13. So we've got green, but we don't have the kind of green move that tells me we can stay green all day long. We may end up in the red anyway. But look, I hope for the best. And as I said, you get a strong opening, you're able to sell into it. You're selling into strength and then looking to pick up some deals later on. Okay, there it is. What else? Let's go. Yeah, here you go. Berkshire Hathaway bought $1 billion of Activision shares a week before the Microsoft acquisition. Being best friends with Billy Gates sure does pay dividends. We'll see what's going. Lots of talk about, where are we really going on here? Where are we headed? What's really going on? This market is got underlying issues to worry about. It's rising, but I think it's a reluctant rise in these markets. We're not setting new all-time highs yet. There is money coming into the market, yes, but there are underlying things going on here that one has to wonder about. I saw an article, by the way. I wanted to mention this to you. I noticed an article that came out this morning. It was in the Wall Street Journal, and I thought this was worthy of a mention. It had to do with how pension funds are now chasing higher returns in what are known as private market debt offerings. And what we're talking about here is, rather than using cash to buy bonds on the bond market from public companies and governments, what's going on is retirement funds are clamoring, as the article says, to invest in private market loans, hungry for an asset that can beat public markets while at the same time throwing off cash to help pay benefits. Two of the nation's three biggest pension funds, those serving public workers in New York and California, have added private credit allocation targets in the past 2 years. Across U.S. state and local retirement funds with private credit portfolios, they're expanding them faster than any other alternative investment, from an average allocation of 3% to an average target now of 5.7% of the fund's assets. For decades, U.S. pension funds have been scaling back on bonds, bank loans, and other types of publicly traded debt as yields have dropped with low interest rates. Now the retirement savings of firefighters and school bus drivers are helping fuel an investing boom in private loans to borrowers ranging from private equity managers, overhauling companies, to consumers buying on layaway. So this is the area. Michael Lombardi, director of credit at the $280 billion New York State Common Retirement Fund, $280 billion fund, which serves police, firefighters, and other public workers, said that he expects to hit the 4% allocation target set in 2020 by the end of this year. So he has been told to get $10 billion into private debt by his bosses. Out of the 280 billion, 10 billion is going into private debt. This has been an interesting shift, and this is happening all over the place. We're talking theoretically, the kind of money we're talking about is hundreds of billions of dollars leaving the public bond markets, going into private areas instead for higher yield. Because the problem is boomers, me, boomer firefighters, boomer cops, boomer teachers, boomer public servants from all state and local governments. We're talking millions upon millions of people that keep everything running out there. These folks are retiring faster as we boom out, as we retire out. I'm 66. And of course, firefighters can look to retire between age 50 and 55. And the reality is, you have a 25-year-old firefighter or a 55-year-old firefighter, and you got to go up that ladder. You're going to send the 25, 30-year-old kid up there because he's got the endurance and the power to do so. The 50, 55-year-old, it's game over. Those guys are the white-haired boys who are directing the 25 and 30-year-olds up the ladder with all the experience to tell them what to do. But once they hit 55, 60, they're done for. They're gone. These guys are entitled and will receive generous benefits for their years of putting their lives on the line service. Guys who've lost pals through the years in fires and all kinds of other issues, including, of course, 9/11. And so we got these guys and girls who are coming to retirement and are going to be generously looked after. The problem is that the pension funds and retirement funds of these guys need to keep bringing in returns from the money they're managing to allow the payments to continue, retirement payments to these veterans. Because what's happening in today's world, in the world of 2022, is a retiring police officer, firefighter, and public servant, their life expectancy is higher today than it was 30 years ago and 40 years ago when they started. And so the pension managers are going, yeah, we see these guys used to live until their early 70s, mid 70s, and then, average, they would start to go. Now they're making it to their mid to late 70s. Even adding a year or two or three of life expectancy has changed everything on the payout side. Because remember, you pay in for those 20, 30 years, and then you collect with inflation protection on the way out forever, as long as you're alive. And then you have spousal benefits paid to the spouse. These pension plans that were cut and created were very generous to these employees. And this was the carrot that was put on the end of the stick to attract young men and women into these areas of service rather than be in the private sector and get paid more money today, and you're on your own when it comes to retirement or not as well off. Where here, you don't make as much in your glory years, your 30s and 40s, but you get your benefit at the end, and that's your payoff for the rest of your life. So these pension funds are scrambling to get higher yields. Now, they can buy a 10-year treasury right now at 2%, or they can buy a note from a company that offers you and I layaway services through online sales and inside shopping malls, where we can take home today the 80-inch television for $2,000. We can take it home now and watch it now and make monthly installments on it, or we can buy it on layaway for a 6-month time frame or a 1-year time frame. There are funds out there that have been created that are multi-billion-dollar funds who have gone to Best Buy, they've gone to Amazon, they've gone to TV manufacturers, they've gone to all the other sellers of goods that are $500, $800, $1,000, $2,000, $5,000, and are offering them all kinds of deals, installment plan financing and layaway financing, so that the retailer, the seller, gets paid now up front, the full price of the sale, less a handling fee, because that's how these funds make their money. And then the retail buyer is making the arrangement through the financing outfit to finance the acquisition of furniture, appliances and whatever have you they're buying, either for immediate delivery with installment payments or a layaway program where the price is locked in. Pension funds are funding these guys, and they're getting 5%, 8%, 9%, 10% interest on that money, lending those dollars out rather than lending the US government money at 2%. This is how they're staying ahead of their retirees. They have got to find ways to enhance returns for their retirees. If a stock like Apple, if Apple were to announce the suspension or the dramatic reduction of their stock buyback program from 90 billion a year to 50 billion a year, and then took the $40 billion and threw it into the dividend program, and the Apple shares were to yield 3 or 4% yield, that would push pension funds to move into Apple stock for the yield, which of course would make the stock go up in price, which is what Apple wants anyway. But Apple hasn't chosen to do that. They don't want to commit 40 billion more a year into a dividend program, because once you do that, it's very embarrassing and it is very damaging to the reputation of the company if they have to pull back the dividends. Once you set dividends, you don't ever want to pull it back. You don't ever want to reduce the amount. It's like a life sentence. We're going to commit 25 cents every 3 months in dividends. You're now committing that forever. And even if you have a bad year, you don't want to not cut that back. You don't want to cut that back. Whereas with a buyback, you can adjust the stock buyback number all you want, and Wall Street forgives you. Wall Street will go, yeah, they're not going to buy 90 billion this year. They're going to buy 60 billion this year. Next year, they're back to 65 billion. Next year, they're at 70 billion. Eventually, they'll get back to 90 billion. But there were tough times last year, or 2 years ago was a slowdown, and I can see why they didn't buy as much stock back. Or the company announces a $90 billion stock buyback program, but doesn't buy $90 billion worth of stock. They only buy $30 billion worth of stock. We don't know during the day, during the week, during the month, if a company actually is buying back their stock like they said they would. I think it was Amazon has for years announced a $10 billion annual stock buyback. And they haven't bought any stock back at all until this past year. They started buying back their stock. In every report coming out, annual report, there would be the report going, we didn't buy any of our stock back. Although we allocated $10 billion to do so. Never did it. That's how that works. With dividends, no. Once you set the dividend, you are on the hook to deliver the dividend. And so this is the difference. So pension funds are looking for income. They can't find it from dividends. They can't get big, fat, juicy dividends that they can rely on. And so they're investing in stock like Apple. The problem with the New York pension fund is if you own $1 billion worth of Apple stock, for example, and the stock goes up 20, 30%, you don't ever sell any. You're worth more money as a mutual fund, as a pension fund. Yeah, your pension fund's worth more money, but they don't sell any stock, because if they sell stock, they're selling part of their portfolio and they're shrinking their portfolio. They need a yield on that investment. They need a return, a dollar return. Now, what do other than holding the stock? They write options. They write options against Apple. But what they'll do is they'll write a 1 month contract that is $15 out of the money. They won't write a weekly that expires in 3 days at $2 out of the money. They don't play those games. They're not that aggressive. They're going to write very long-term and very low-yielding premiums. But premiums are premiums. And on $1 billion, if you can bring in $1 million a month, $3 million a month, it's $3 million a month. $36 million a year, it's something. It's something. And that goes towards benefit payouts to retirees. Okay. Anyway, so I found that story today, a most interesting development going on as pension funds are directing funds over towards private debt markets, not the public debt markets. Really interesting there. Anyway, never a dull moment in this wild and wacky world in which we live. We're up 376 on the Dow right now. We're up 52 on S&P. We're up 208 on NASDAQ. Oil down, happy to report, $4 a barrel to 91.43. This is good. This is really good. If oil wants to stay this low, The markets can have a good day and hold most of their gains, but I still don't believe it. I still believe that the markets will top out and it will slowly slide and give a bunch of this back. That's just my hunch here. I'm showing Rocket Lab now at 984, up 37 cents. The high of the day on Rocket Lab was 997. That was just after the opening, and we're at 984. Still up 37 cents, but only 135,000 volume. Not a million shares traded there. SoFi 1213. The opening high right after the opening 1243. We're at 1213. We're near the low of the day. We're on 8.7 million volume, and we're at the low of the day. Only up 13 cents on SoFi. That's not good. GameStop 119.61. High of the day 122.25 right after the opening. Now we're at 119.61, near the low of the day of 119.26. 248,000 volume. That's not good. AMC at 1814. The high was right off the bat, 1853. 5.3 volume, 5.3 million volume in 22 minutes. That is really light. That's not good. We're at 1815, still up 40 cents. Granted, we're up 40, but we're off that high of the day. And we're not even getting 19 now. We're not getting $19 prints. We lost the $20 print 3 days ago. We can't get it back at the moment. Matterport, 808. It's up 41 cents. This is great. But Matterport has got this reputation lately of starting off nice and then fading out all day long. And Matterport has got to show us some consistency here. We're up 42 cents to 810. That's the high of the day right now on 1.5 million, but that's light volume. And it's a 42-cent move, but it's 810 a share. We are hitting lower highs all the time. We are not hitting higher highs. We're hitting lower highs, and we don't seem able to break out of a sell wave and get into a new level of up movement. We're not getting it. The low in the last 52 weeks, 750. That was not too long ago. If it was at all a week ago, it could have been yesterday. We're at 810 now. This is not enough movement. I see the chart for the last month going down, coming back up, not going higher, going down, not going back up to the previous high, going down. It's a series of lower highs and lower lows, again and again and again. Every couple of days, the rollover continues on Matterport. Very frustrating. I think totally unjustified considering the potential of this company, but this stock is under pressure. There's no ifs, ands, or buts about it. ME 454, only up 5.5 cents. Spire at 306, up 2 pennies. ATIP up 6 cents to 276. We can't get back to 3 on this thing. Sextera 1140, up 12 cents. SmartRent 888, can't get the 9 and hold it. We got to 899 this morning, couldn't hit 9. We've traded 18,000 shares. This is not good. I'm seeing weakness here that I don't like, even in an up day. We're at 366 Dow points for the upside. That's a backing off. We're up 54 on S&P. We're up 228 on NASDAQ. We're not going anywhere right now. These markets have recovered a bit, but they're not even holding their recovery. We're down $4 on oil right now. There you go, kids. Let's see. All that green's going down the drain. Oh, no green for us. And like I said, I'm saying our IAM pension lost money. Now the poor workers can't get full pension until 65. And this is other things that are happening where we have these contract negotiations going on with large companies and their employees. And what's on the table? Pension benefits. All these employees that fought tooth and nail to get the best contracts they could back in the 80s and the 90s and the 2000s and 2010s. The new game is now these pensioners have to fight tooth and nail to hang on to the pensions that they won, the benefits they won 30 years ago. And it is the current worker today, that There are fewer of them. For example, car companies, they have fewer auto workers today than they had 30 years ago. These guys are contributing to a pension that is carrying a legacy number of retirees. And the loyalty to these retirees is waning because these new employees are going, hey, these old guys came in here in the 90s and the 2000s. They were paid the equivalent of $35 an hour, 40 bucks an hour. We're getting 22 to 25 an hour to start. We have to be here for 10 years to reach these levels that these guys had, and all our deductions are going to pay these guys their benefits. And there are fewer of us. And so our pensions are dropping off. And every 2 years, 3 years, the discussions are happening between the management and the union to keep funding the pension, to keep paying those pensioners off. And this is another 10, 15 years before we get through the bulk of the boomers. Because the hope is, again, this is just the actuaries. These are the guys in the life insurance business. They're saying in 15 years, in 2037 and 2040, most of the boomers will be gone. They will have passed on. They will have died. So will their wives. Most of them they will have passed because it's just a matter of mathematics. These 75-year-olds are going to be 90 to 95-year-olds. If they're alive, that's how old they're going to be. Many of them will not be here anymore. And those pension benefits stop going to those people and their estates. And now the pension benefits are targeting the wave of clients and workers from behind those guys. And like I say, the longer we live, the more difficult pensions have, the more difficulty they have to keep the benefits going. Anyway, there you have it. So, in other words, income is key. Keep income coming in. GameStop, 121.31, up 422. If you are able to write options on GameStop, you could write Friday contracts right now. 122s, 125s for this Friday, 125s, 128s, 130s for next Friday or the Friday after. Bringing in income is the name of the game if you can on this little up move. AMC's up only 58 cents to 18.33. The shares have already fluctuated quite dramatically. They were as high as 18.53 down to 17.96. We're at 18.28 on AMC on 6.1 million volume. So we're not doing incredibly well, considering that the Dow was up 400 plus. The Dow is now up 300 and, well, not even that, 292 points is at the moment the Dow Jones level. We're up 50 on S&P and we're up 239 on NASDAQ. Oil is down $4.09. That's where we're at right now. If we get any news this afternoon, anytime during the day, we get any kind of inkling that the Russian troop movement is not as optimistic as once thought, this market takes a dump. We take a shot lower. Oil will rise quickly, and this market will give up 300 points in 10 minutes. So we are on eggshells watching the Ukraine situation. I have no faith, none, that the Russians are pulling back at all. I don't think so. So I think the heat's going to be on this one a little longer, but we'll see. Right now, 121.12 on GameStop, up 403. AMC at 18.36, up 61 cents. Matterport 823 up 55. ME up only 18 cents to 467. SoFi is up 35 cents to 12.36. Rocket Lab 998 up 50 cents. It's a good looking day on these stocks. It looks great, but looks are deceiving because on Rocket Lab, 166,000 shares is all the volume we've got. We have no buyers piling in here that are in a desperate mood to buy. The stock. There's no desperation to buy it. SoFi volume, 8.7 million, 11 million. 11 million is the volume now on SoFi. 12.34 last trade. Not good enough. GameStop, 120.88 now, up 379. Volume, 300,000. AMC, 18.31 to 18.33 on 6.4 million. Not enough. Matterport 821. The high was 825 or 821. 1.9 million, which sounds good. It's mediocre, so it's not bad. It's not great. ME 466 on 466,000. This is near the high of the day, which is good to see, but we are a whole ways away from $5 a share. Just there on Wednesday. We were just there last week. Aspire 311 up 7.5 cents, high of the day 311, 44,000 volume. Not good. ATIP volume 154,000. We're up 7 cents to 277. We were as high as 283. And Smart Rent volume at 888 a share now, 21,000 shares, up 17 cents. That's not good enough. And Sextera 1148 up 20 cents. This is the high of the day, 13,000 volume. I'm glad to see it up. Glad to see the high of the day, but I want to see action. I want to see some commitment. I want to see dollars through here. Robinhood up 34 cents to 13.70. Vanik up 8.31. Home Depot up 3.29. IBM up 60 cents, backing off. Microsoft up 4.42, but it's still only at 2.99 a share. It got to 300, but that was it. We're watching that. Apple up $2 to 170.93. Hit 171.45. Writing 172s, 73s, 174s for this Friday. Might be the right on those Apple short-term calls. Goldman up 206. We could not take off. We got up to 365, and that was it. And now we're back to 362.50. The stock should be over 400 a share with the fundamentals, but it's not happening. There's these inflation concerns. Not good. Goldman 362.84. Cisco up 64 cents to 53.82. Facebook up only $1 now. Amazon is still up $47, was up $10 higher than this. So far holding its gains. Tesla is up $40. That's holding its gains at the high of the day right now. And over at Google, we're up $29, but we were higher. We were $23 higher than this. It was a $53 gain or so. Now it's $29. Weakness beginning to show there. Bed Bath Beyond up 65 cents. BlackBerry up 16. Royal Caribbean up 389 to 86.64. Target has gone negative, down 15 cents. That's the first one of those to go down. Walmart's only up 79 cents. Not doing a lot of positive movement. We'll watch this closely, everybody. Thank you for being here this morning with me. And we're up now 252 on the Dow. We're backing off. This is the weakest point of the Dow on the day right now. GameStop 121.14, it would appear. 121.50, 121.14. Up about 4.05 a share. AMC 18.34 up 59 cents. The Dow's up 262. Thank you for joining me from around the world today. Good to have you here. Wanted to take a peek at something else. I was going to talk to you about something else today. There's an article that came out this morning that caught my eye. It had to do with the Justice Department investigating large trades, block trades. Regulators, here it is right here. I'll read this story. It's the SEC and the Justice Department jointly are investigating large share sales communications between banks and hedge funds. Regulators are probing block trading at Morgan Stanley, Goldman, other Wall Street firms. The story is that federal investigators are probing the business of block trading on Wall Street, examining whether bankers might have improperly tipped off hedge fund clients in advance of large share sales, according to people familiar with the situation. The Securities and Exchange Commission sent subpoenas to firms including Morgan Stanley and Goldman Sachs, as well as several hedge funds, asking for trading records and information about the investors' communications with bankers, some of the people said. The Justice Department also is investigating the matter, some of the people said as well. Morgan Stanley has been an early focus of the probe, said people familiar with the matter. The issuance of subpoenas doesn't mean charges will be brought against any of the firms, or individuals whose activities are being scrutinized. Regulators have been looking into irregularities around block trades since at least 2019, when the SEC requested records from several large banks. People familiar with the matter have been saying. Investigators are looking at whether bankers improperly alerted favored clients to the sales before they were publicly disclosed, and whether the funds benefited from the information, for example, by shorting the shares in question. Shares of companies selling stock often fall because of an increase in supply hitting the market, and they do so frequently in the hours before a big block is sold, a phenomenon that has long raised questions on Wall Street. Some of the funds that received subpoenas act as liquidity providers to Wall Street firms, according to some people, standing by to purchase large blocks or large amounts of stock or other securities, including those that have a few interested buyers. The rules governing when and how Wall Street firms can tell clients about upcoming block trades are murky. In some cases, there are questions around whether divulging certain information or acting on it is improper or illegal, lawyers are saying. Block trades are big business on Wall Street that has gotten even bigger. There were nearly $70 billion of them in the US in 2021. It's a 5-year high, according to Deal Logic. Morgan Stanley was the most active bank last year, lending more than a quarter of the deals by value. Let me repeat that. I got to reread that. Morgan Stanley was the most active banker last year, leading more than a quarter of the deals by value and earning more than $300 million in fees. This is according to Deal Logic, their data. Goldman is also a big player in the business. Block trades take place when a company or a large shareholder wants to sell a lot of stock at once. Unloading it in small dribs could take weeks and might drive down the price. So banks are asked to bid for the entire block. They typically submit bids at a discount to the market price. The winning banks then offer the shares to clients at a slight premium to the agreed price, hoping to eke out a profit. The banks bear the risk that the stock drops precipitously before they can do so. In recent years, the block trading business has boomed because of record volumes of initial public offerings, IPOs, and other deals such as secondary or follow-on offerings. As stock markets have soared, block trades often occur when lockup periods that prevent insiders from selling for a time after an IPO expire. Companies have also started turning to block trades because they are more efficient and can impact a stock price less than a traditional follow-on offering. So I hope that that makes sense to you. Block trades have been part of the business since I was in the business. I remember when I became a partner in a brokerage firm, I would get my main principal partner and myself, we would get calls, and we would get a phone call from a publicly traded company. And the president of the company would call us, and it would be a junior oil and gas outfit. And they'd say, they'd have accounts with us, and they would say, look, one of our directors, he wants to buy stock from our treasury. He has an option, and he can buy 100,000 shares at $2 a share from the treasury of our company. It's a $200,000 deal. This is 1981. Okay, this is 40 years ago. All right. So the director can buy 100,000 shares at $2 a share. He owns 500,000 shares right now. And the stock is trading at $250 a share right now on the open market. And he wants to sell enough stock that he has that's free tradable to get enough money to buy the block of stock from the treasury. In other words, 200 grand will end up in the bank account of the public company the minute he can exercise this block trade purchase, this option. But he needs to offload enough stock on the open market to do this deal. Now, the president goes on to say, we found three fans of the company. We have three connections, three people that really like our company, and they can buy 50,000 shares at $250 a share on the open market. They're interested in buying enough stock to get us about 125 grand worth of this 200,000 we need. What we need is another $75,000 of buying of stock to get 200 grand into the hands of the director, who can then walk it into the write a check to us, the company, and buy the stock at $2. And the call would come to us saying, can you help us find $75,000 of buying interest for our stock so that we can do this entire trade? And here's the incentive. The incentive is that the director will offer us stock from his personal account at $240 a share, even though the market is at $250. And the brokerage firm, our brokerage firm, would be given those three buyers that want the rest of that stock. They would open accounts with us, and they would agree to buy the shares through our firm at $240 a share to conduct the rest of this block trade, so that our firm would generate commissions, $200,000 on a $200,000 sale of stock from the director, and $200,000 worth of stock from the buyers. So that's $400,000 of transaction revenue. And in those days, way back when in the 1980s, the commissions were as high as 3%. So what we would be looking at is $6,000 in commissions on the sell side from the director, $6,000 in commissions from the buy side, from the buyers of the stock. That's $12,000 in gross commissions. I, as the lone stockbroker in the house, would be offered all $12,000 of gross commissions, of which I would get 40% in my pay packet. That's $4,800 that I am making for this month in 1981. All right, the rent I was paying in 1981, if I was in a cheap apartment, a two-bedroom apartment, I would be paying $375 a month to $400 a month. As it was, I was in a nice apartment at the time, paying a little bit more than that. So $4,800 gross before tax was a ton of money in 1980-81. And so I would get on my phone to my clientele and I would say, look, we're putting a block trade together, and I can get you in on a block of stock at $240 a share. I can get you stock at $240 a share. It's trading at $250 a share. And at the end of the day, the public company is going to be $200,000 richer in cash, which they're going to announce. They're going to announce publicly that they just completed a private placement. Now, this one block I'm working on is with this one director. I'd be upfront about it. Wouldn't hide any of this information to my clientele. But what was also going on was, through that president of the company, his other directors were also concluding block trades and buying stock from the treasury. And what he was actually doing was raising $1 million by getting 500,000 shares exercised at $2 a share. But 200,000 of it was through my firm, and 800,000 was through other firms in the area. Again, loyal followers of his company. Some were in Toronto, some were in Vancouver, and then there was us in Calgary. And so when the deal got done within the next few hours, by the end of that day's business, the public company had $1 million cash in its bank account that it didn't have yesterday. This is a positive. It's like an underwriting. And this $1 million in this oil and gas company's account would allow these guys to complete an oil drilling program that they were on the hook for 10% of. This million allowed them to be part of a $10 million oil and gas drilling program that they were part of. This was their share. All good news and all anticipatory results the next 3 to 6 months as these wells would get drilled out. Each well would be $1 million. 10 wells were drilled. These are all basically what we call earnout wells. These were wells that were going down 4,500 feet or so, and they were into a known pay zone. In other words, the success rate of these wells was 90 to 95%, that all 10 would hit oil in an existing oil field. And that would mean that this company would have a higher earning rate or level per share, and as a corporation, as these wells got tied up and got hooked into the existing pipelines, they would get that oil to market because this oil field was connected into existing pipelines to get oil to the market. It was pre-sold oil. And so I, the broker, would be on the blower to my top prospects, and I'd say, I want you to buy some stock here. We're going to put together this block trade. This is our contribution to this big pot of money. This company is going to have a whole bunch of positive news in the next, today and the next 6 months, and I think we're going to do just fine. And so that's what a block trade used to be like in 1980-81. Today, fast forward to 2022, it's all done through pension funds, mutual funds, hedge funds, ETFs. You've got these boys in New York who are now putting together a 5 million share block trade of $400 million, and the money is going to sellers, and the buyers are buying up this block of stock at a discount to the market. And when it works perfectly, you get a big block of stock being placed into the market below market to a group of investors buying a big chunk of a company, a big block of stock. And everyone is happy about it. The buyers are happy, the sellers are happy, the market is happy, because you don't have the market being influenced in a bad way. When the deals go south is when a block trade is tipped off to friends of the brokerage firm, and there are shorters all over the place shorting the crap out of the stock for days leading up to the block trade. And there is no advantage to anybody by the time the deal gets done, and a whole bunch of shenanigan players are sitting on sales 10, 15 cents higher than the block trade's being done at, and these guys are the buyers. They've already pre-sold their stock off, and they're happy to buy chunks of this block trade because they're just cashing in on their profit. That's all they're doing. And so the company might be funded with some cash, yeah. Some sellers have been able to offload stock, yeah. But the market as a whole, all the other shareholders have noticed that their shares have gone down 15% in value in the last week or two, and they don't know why. And now it comes out that a big block trade has been done. And there's no guarantee that stock necessarily goes back to where it came from. And this is what the Justice Department wants to look into. Is this shenaniganism? Is this illegal? Is this insider information being shared before the actual fact? That's what has to be determined. And Jen is here. How are you?
Good morning.
I'm busy today.
You are.
Educating my viewers on all kinds of stuff today. I was talking about, I don't know if you were ever with me way back when, but I was talking this morning about what it used to be like in Merrill Lynch Canada's offices on 7th Avenue, where the LRT line was on 4th Street, where you would walk in to you walk in, it would be 30 below it. You'd walk in the first door and you're in an anteroom. And then you stomp your feet on the carpeting, and then you open the second door and get inside the office. And there's another carpet there, and you're stomping
Wait for
your
your
feet.
glasses to unfog.
Get your glasses unfogged. And then there would be theater seats. There'd be like 3 rows of theater seats, and all these old codgers would be seen. We call them old codgers. These would be 66-year-old ancient guys. Oh, shoot, I'm 66. 66-year-old ancient guys who would be smoking cigars.
Yeah.
And
they'd all kind of have like their seat.
They'd have their seat, and they'd be sitting there watching the ticker tape going by at the front of the room with the Merrill Lynch Canada brokers yelling and screaming and throwing orders all over the place. And some of these guys would be sitting there with these bamboo sticks that would be 3-4 feet long. And inside the bamboo stick would be a newspaper that would keep it straight up and down like a book.
Right.
Because in those days, we didn't have tabloid.
And they'd have racks of newspapers, so you could just go and lift it up.
Exactly. They used to have, we didn't have the 2-foot tall newspaper. We had the 3.5-foot long by 2-foot wide newspaper. And if you opened the page up, you were 5 feet across and 3 feet. You had a real Newspaper. Well, in those days, you had the bamboo sticks that you had that held the crease. That was the crease in the middle.
Yeah.
And then you held your other hand here, and you
It
could
had
then
the slit to put the newspaper through.
exactly. And in the corner would be either a wall where these would hang horizontally, or there would be a bucket, a bucket that would hold umbrellas, that kind of a bucket, where these papers would be rolled around the bamboo, and it would be in there. And you would just go there and grab one of these bamboo sticks, sit down at the chair and unroll it, and then you'd read your paper, and you'd be on top of what's happening in the
They
world
had
today.
coffee available. Oh,
Yeah, and the ashtrays would be cleaned up.
Stay there all day.
There would be one of the grunts. In the summertime, it would be a university student who would work for nothing. It would be just a volunteer, an intern who would work for 8 weeks at Merrill Lynch. And the first 2 weeks of your internship, you looked after the codgers in the back. You made sure they had coffee. You made sure the ashtrays were cleaned out. You made sure
open
that
the doors every once in a while, let some air in.
You made sure that the papers were properly sorted and everything else. And the other thing was that the old guys at the back, that's where the ticker tape machines were. These Dow Jones Newswire machines that would go, and these headlines would just drift out of these rolls of paper that were like this thick, like toilet paper, but it would be print paper.
Yeah, it's only this big, the ticker.
Little announcements would come out, and it would be like a four sentence announcement about IBM's latest quarterly earnings, and then there'd be the U.S. government announces the results of their bond offering, and all this stuff would just constantly come out. The Dow Jones Newswire service, and the intern's job was every 15, 20 minutes they had to go to the machine. And they had to gather up all the paper as it would gather up on the floor behind the machine. It would just keep rolling and rolling and rolling. And they would have to cut off 6 feet sections of paper at a time, and then put it on a big clipboard and hang the clipboard on the wall.
Yeah.
And so the old codgers,
you could look back and
they'd come up to the machine, and they have their glasses on, and they'd have the prescription on the bottom, and they'd be looking like this, and they'd be lifting the pieces of paper up, or they would grab the clipboard and walk over to their little chair over here, their little theater seat, and they would then sit there and read an hour's worth of headlines that have come out in the last hour, and they'd put it back, and they'd hand it to the intern, who would then hang it back up on the wall and would add the next 5 sheets of paper. And there would be 3 of these machines. There would be the Dow Jones Newswire service. There would be the Associated Press and the Reuters machine. And these 3 machines would be going all the time, just. And whenever something big happened, like someone would take a gun and try to shoot the president of the United States, the bells would be going, and all the old codgers would be standing around the machine reading this thing, and the room would be screaming, and they'd be yelling at each other, and they'd be screaming back and forth what they heard over there, and the phones would be ringing like crazy, and it would be just mayhem. It was great. It was great. It's all gone. That's all gone. Doesn't exist anymore. And I was talking about that this morning.
I know. It's not the same.
It's not
It's not oral trading anymore.
No, it's all different now. Yeah. So here we are watching the markets on our little devices. We've got portability. Yep. Yeah. We've got independence. Yep.
Inclusivity.
We don't.
Everybody can play.
Everybody can play. We don't have the big commissions anymore that we have to pay.
Yep.
True, but we don't get what we used to get.
Yeah.
And I'll tell you, the old codgers, they'd come home at 3 p.m. back to their, if they were widowers, these guys would come back to their apartments or wherever they live and make themselves some dinner.
They'd go to their clubs.
Or they'd go to their club and play bridge, or they'd go to the track. As I was mentioning earlier, some of them would go to the track in later afternoon.
Go to the Legion.
Go to the Legion. That's right, the Legion Hall. And these guys would be totally up to speed with everything. They know everything. They know everything politically, everything business-wise, everything news-wise. They knew what was happening in Europe. They knew what was happening in Asia. They were on top of commodities. They knew everything. They knew everything the brokers knew. And every day, 5 days a week, they'd head to their brokerage office, and they'd be on top of the markets, because there was no CNBC. There was no televised business network. It didn't exist. There were only 3 channels. You'd be lucky.
They'd get hooked on the adrenaline.
Oh, they'd be on it, and they'd love it. They'd absolutely love it. And until the day they died, they would be in there watching their money. They would be watching their money. Absolutely. Oh, the good old days. Yeah. We're up 351 points right now. We're not at the high of the day. We started with about a 400 point gain after a few minutes today. GameStop is at 120.55, up 346. And SoFi is at 1207, only up 7 cents. Rocket
Lots of
Lab
green.
up 43. We have
Started
green,
out red.
but we're
Lots of
not green enough. We're green, but we're not really mega green.
It's not easy being green.
It's not easy being green. That's true. It's not simple. Bill Coyne, thank you, my friend, for this donation, $5. Bruce, bad news. The old covers are still there, hidden in a back room behind all the computers. The old covers are still there, hidden in the back room behind all the computers. Oh, things have changed.
So, like
so
most
much.
businesses, they never throw away anything. Yeah.
That's true too.
So
That's
what's your
true.
bagel going to be this morning? I'm sad.
Why?
The men's curling lost.
The Canadian men?
Yes.
Who did they lose to?
Russia.
The Russians.
What?
Is that a playoff? Are they done?
No, I think this was the last of the round robins.
Are they still in the playoffs?
I don't think so. I don't think they will be in the playoffs now. I think that was
Canadian men's curling not in the playoffs. Oh, what a disaster! This is a national.
Last I looked, Norway was playing Great Britain, and there's two. Those are two really good teams.
This is a national calamity.
I couldn't see it. I couldn't watch it.
Not good. That's
they
not
both
good.
have really cute skips too. If anybody cares, you know.
Garrett,
Just saying.
cute,
A little eye candy to go with the sport never
cute
hurts.
skips.
Never hurts. Never hurts.
30 years ago and 40 years ago, it was not uncommon to watch on television Canadian championships, curling, the best rinks from across Canada, be like 12 of these guys.
The Briar.
At the Briar. And in those days, at least 30, 40 years ago, you could smoke in the arena watching these guys. And they would smoke between shots on the ice.
You'd have the big old ketchup cans and with sand in them. So they'd put their cigar, their cigarette, their whatever in the sand.
Yep.
Throw their rock, come back and pick it up. So when curling went to the Olympics as what did they do at first? It's
demonstration
sport. The best Canadian curler was a man called the Wrench.
The Wrench.
And he was only
Ed Wernick.
He was only about 200 pounds overweight, smoked, drank, said all the words, and the Canadian Olympic Committee said, "We're going to give you a trainer and a cook.
You got 6 months.
We got to get this down. You don't look like an athlete."
Six months. We're giving you 6 months. If you're going to represent our country, you're going to lose 30 pounds.
Minimum.
And you're not smoking on the ice.
Oh, yeah. No, they didn't smoke on the ice.
No
Olympics,
smoking on the ice.
So get used to that.
Oh, my God.
Oh, it's funny.
Oh, yeah.
And it's hard. I mean, curling is very much a sport of balance.
Oh, yeah.
And now you're changing his balance.
You want to tell Jack Nicklaus to change his lifestyle?
Yeah.
As he's putting a 12-foot putt for a birdie for $1 million, and you're telling Jack, we want you to lose 15 pounds for the next, between now and 3 months from now for your next Masters tournament.
Yeah.
You can tell a guy to do that? That's what these guys are doing with the curlers. You don't tell a curler. Well, they did.
They did.
And today, curling teams, these guys work out in weight training rooms. These curlers are there are actually firefighters that are curlers, like 35-year-old firefighters that are curlers. Yes. And these guys are in better shape than the firefighters in their station because they work out more than those guys do.
You'll hear the yell from the crowd, "Take your shirt off."
Take off your shirt. Because the women just can't wait to see the pecs. Because curlers have pecs.
Oh, they are.
Oh, they're like bodybuilders now.
You try sweeping like that.
This is why Los Angeles, curling is taking LA by storm.
Well, plus it's a game that
there are certain neighborhoods in LA, curling clubs are.
You can get success in.
Oh, you make money.
Pretty early.
If you're any good at curling, you make money at the Bonspiels.
Well, and not even that. Like, you can go out and play a game and have success at it and feel good. It's like golf, that you can go out and hit the ball and know you're not as good as those people are, but you can still have an
play
enjoyable
the game. It's true. It's
Same
not like tennis
curling.
with tennis elbow and running around
Except
like a monkey.
the next day, you're going to wake up and think, I can't get out of bed.
I can't get out of bed.
What happened?
What was I thinking? We're up 400 and we're up 410 points on the Dow right now. GameStop is still 121, only up 391.
Mr. What is your bagel going to be?
Well,
I have to go see who won between Norway and Great
do we have?
Though everybody knows it's Scotland and not Great Britain. Mullet.
It's amazing. It's amazing I get in anything edgewise, isn't it?
Scotland.
Do we have ham left in the house?
Yes, we do.
I'll have a ham and cheese with a measure of horseradish.
Okay.
And a nice crispy bacon.
Okay,
you could pull that one off. That would be fabulous. And I'd love it.
And take this.
Yes, ma'am. Thank you. Thank you so much. If you're able to also carry in that cola bottle, we'll top this thing up. Fantastic. Oh my gosh. We'll see how that works out. Welcome everybody. We're up 400 points on the Dow right now. We're up 46 cents on Rocket Lab, $9.94 last trade. SoFi is at $12.15, up 15 cents. GameStop 121.10, up $4. AMC is at 18.33, up 58 cents. AMC, the high was 18.59. 9.7 million traded. This is the first hour. Last week we traded 26 million in the first hour. Now it's 9. This is not good. Mark my words. Matterport 821, up 53 cents. Thank you. ME 451, only 2.8 cents higher. Spire's up 7 cents to 311. ATIP 279.9, up about a dime. SmartRent up 21 cents to 892. Cyxtera 1159, up 31 cents. On our big issues, Vanik is up 878. Home Depot is up only $1.80. IBM up 95 cents. We don't have big gains here. Microsoft is up 4.29. Apple's up $2. Goldman is holding a 450 gain, but it's only a 360, 475. We're not at 380, 400. Cisco, $54 last trade, 54.10, up 92 cents. Facebook up only 41 cents. Amazon is up $19.50. Tesla's up $41. Google up 27. We're not getting a massive breakout all over the place. Yeah, we're up a bit, but remember, the Dow is up 397. Sounds great, doesn't it? It's 1.1%. So any stock that's up more than 1.1% is outdoing the Dow. This is not great. It's okay. It's not bad, but it's not good enough. We're up 56 points on S&P. We're up 235 on NASDAQ. I still maintain this market is on the edge of a sell-off, because we could have a reversal profit taking, weak need investors, short-term thinkers, any event out of Ukraine that is out of the ordinary, down we go. So we're still on pins and needles here. 120.79 on GameStop, up 376. The high is 122.25. The low 119.26, and we're 160 away from the low. Still up 375. Yes. 429,000. Not great. Not great enough. 1829 now on AMC, up 54. Seem to be backing off. Pitcomb is saying, I just had 3 contracts. January 23, a Rocket Lab 15s sold for $205. So offering up, you can buy Rocket Lab at $9.94 here, sell $15 contracts, bring in $2 cash. And you're offering your Rocket Lab for $17.05 between now and Jan 23, buying at $9.94. That's a nice return on your money. That's a nice return on your money. $7 gain, over a $7 gain on a $9.90 investment. It's good money. Yeah. B-Fits. Bruce, with Matterport being near its all-time low, do you think a slightly better or worse or as expected earnings result would do much to the stock? Last earnings was near at the highs and saw an 18% drop. B-Fits, I think the problem with Matterport is not, let me rephrase that. Matterport's immediate trading range for the stock is not going to be tied to its earnings at all. It doesn't matter what they say. This is my personal opinion. If they come out with fantastic results, higher than expected, becoming a profitable company sooner than we thought, all that kind of good stuff. That won't be bad. It's not like people will sell on the news. There might be a bounce on this. Maybe the stock will go to 8.5, 9.5, maybe even $10. The problem with Matterport is not actually its price at 814 is not here because of its potential earnings on this quarterly report. The reason Matterport is where it is right now, right here where it is right now, is I think simply because a lot of investors who were able to acquire Matterport shares when Matterport was a private concern for $1 a share, $2 a share, 50 cents a share, 150 share. I don't know the prices exactly, but I'm going to guess at much, much lower prices than where we're trading at right here. They can sell the stock here at $8.14 a share. As ridiculous as this sounds, at $8.14, the stock was $37 3 months ago. They could sell it for $8.14 and still make money on it. And I'm guessing, and again, I've been guessing now for weeks with Matterport, SoFi, Rocket Lab, and others. I've been guessing for weeks that the pipe financiers, the outfits that put money in at $10 a piece, and I believe insiders that put money in through their paycheck withdrawals years ago, 2 years, 3 years, 4 years ago, when they were small, private little concerns, these folks have been rewarded for their loyalty to the company over the years they've been there, when the company was just the tiniest little speck. They've been rewarded for their loyalty with stock. And I think we're dealing with millions of shares of stock that has been issued to these folks, loyal to a core, loyal to the core people, really. I don't have any problem with these folks. These folks have been issued millions and millions and millions of shares, and slowly but surely, as each month goes by, since the takeover of the SPAC by the private company and the filings to the SEC and quarterly reports coming out, slowly but surely, all of these folks are being granted permission under SEC bylaws and rules to be able to do whatever they want with their stock. And I get the impression that in the case of individuals, that a lot of individuals who got these shares for $1 a share 2-3 years ago were promised that one day we're going to go public, and one day you're going to have publicly traded shares in your 401k or your staff savings account or whatever. I think these folks were promised that someday they're going to have liquidity and they're going to be able to, pay off those student loans that they took out 8 years ago, 10 years ago, still owe $100,000 on them. They're going to be able to do whatever they want with the money. And then there are people out there who probably borrowed against their credit cards, and they bought furniture for their apartment, and they had to make repairs to their cars. They've bought children clothing and dance recital practice money. I don't know what, just life. And I think a lot of these folks are finally in a position where they can actually offer stock for sale, and they don't know where the shares are going to go because they're not market people. They're not stock market people. They're just average employees that happen to now work for a company that's a publicly traded company. But the company they work for is not known as Apple. It's not known as General Electric. It's Matterport. It's SoFi. It's Rocket Lab. It's ME. It's Spire. It's ATIP. It's Smart. They're working with small little companies that are still relatively small organizations. They don't have 25,000 employees, but they happen to be publicly traded now. And these folks are looking at this going, well, I can now sell my 10,000 shares. I can now sell my 10,000 shares. And if I sell them at $8.22, I get $82,000. And I make $60,000 a year or $80,000 a year, whatever their salary is. Maybe they only make $45,000 a year. They've worked for the company for 5 years, and they were used to make $35,000, $45,000 a year. Now they're up to $55,000 a year, and they've got an $80,000 windfall in their hands that they could take advantage of if they wanted to, and it's too powerful not to do it. And they're going to do it, and they're going to pay $20,000 in tax, or they've already paid the tax on the gain of the stock. Hence, they borrowed money to pay the tax, and they're now getting that money back by selling stock and getting ahead of the curve. And they're going to pay off half of their student loan, all their credit cards. They got a $4,500 or $14,500 car loan that still is outstanding. They're going to reduce their cost of living by paying off all their debts. And every single dollar is gone. It's gone. They have nothing left. It's all spent. But now when they get their paycheck every 2 weeks, instead of all of it being committed to all these IOUs, they get to keep half of that money now, because this is the payoff having worked for a company. And they still have stock options to buy stock this year and next year and the year after, having been with the company for so many years. And their plan is, maybe 5 or 10,000 of this money that they're getting right now is going to go towards buying more stock that they've got options on. I just talked about this stock option story from the 1980s. This is the new wave, that there may well be at Matterport 300 employees that can each buy, enough stock to put $5 million in the company's treasury. Well, they got to sell $10 million worth of stock to net out $5 million after tax and personal expenses to put $5 million into the company. And that might be what's going on. It's something that basic and honest and not sinister, not personal. They're fans, but they're just employees that don't have deep pockets. These are not millionaires. These are thousandaires, and they're just trying to get by on it. And their thinking is, I'll sell this stock, pay the tax on it, and buy that stock that is an option, and pay tax on that, because I'm buying that stuff for $4 a share and it's at $8. I got to pay tax on this $4 gain, even though I can't sell it. I got to pay it up front. They're doing it. They're selling the stock to take all of this out. And the winner is the company in the end, because it's got more cash in the bank from its own employees that came from the market. And the company's funded with even more money to make an even larger number of deals, which we will hear about sooner or later, which will move the market. But we've got to endure all this in the meantime. That could be it. It could not be it, but that could be it. Okay. The earnings result. I sure hope the earnings result is a really positive thing, and if it is, that would be beautiful, a beautiful thing. I agree. Oops, codgers. Yeah, we're codgers. Bill, Wall Street Journal. Camilla leads after figure skating short program heightening Olympic doping controversy. Oh, it's crazy. Will, hey, Uncle Bruce, this might be a silly question, but would anything happen if you wrote on a 1250 SoFi call that you own if the price went below 1250 after you wrote your contract, if anyone knows the answer? I think you might get a margin call from your broker. You might get a margin call to cough up enough cash to cover the call position, where you might be asked to buy $2,500 worth of stock. They might want $2,500 cash because the option no longer qualifies as collateral for it. That might happen. What's the answer? You buy $10 calls. You buy cheaper calls. So sell the call you have and buy cheaper calls that are in the money, and you're still covered on that poor man covered call strategy you're trying to use. That's my guess. That's what I was thinking. There you go. We're probably on the same page on that right now. We're at 422 points on the upside on the Dow today. We're up at 999 on Rocket Lab, up 51 cents. SoFi 1214 up 14 cents. That's all. On a 423 point day, SoFi is up 14 measly cents. That is not right. GameStop 121.43 up 434. AMC at 1838 up 63. Matterport is 820 up 52 cents. ME at 454 up only a nickel. Spire up 13 cents to 13.17. That's moving. That is beginning to move. We were sitting at 302, 305, 307, 317 up 13 cents on 103,000. No volume, but we're moving. ATIP 283 up 13 cents. It's moving. Smart Rent flat at up 16. Cyxtera is moving up now, up 39 cents, 1167. So we got moves on some of our stocks, but not all of them. Okay. I was hoping for a Super Bowl bump. Me too. What to expect from Spire? Well, same thing with Spire. What is going to happen? We are moving, but I'm happy to see it up from 201 to 317. I'd like to see it now break 4. I'd like this next level. That would be a double from the low of the year as a starter. Let's go from there. Shez, Will, I am long on some $10 Matterport calls. I write 1250s on them. Nothing has happened since Matterport went below 10. Interesting. Franz, from the conference call, Franz is wondering what to expect from Spire on the conference call. This I don't know, my friend. Hopefully they will give us, more clarity on what's happening, how it's going, maybe how long is the order book that they've got, how many what's the word I'm looking for? I'm not sure if they use the word subscribers. Or they don't use the word members, but they do have a list of clientele that have contracts with them that they're managing their satellite data information for, and it's a long list. I'm wondering if they'll share how long that list is now, because it's growing, and that would be a wonderful thing to release to the public, even if it's a percentage, saying, we're 25%, we have 25% more customers that have signed up for our services. And these contracts last between 1 and 5 years each. And we roll them over all the time. No one ever leaves the firm. It's kind of like the movie The Firm. No one ever leaves the firm alive. Funny that. No one ever leaves this company. Once they sign up for our services, they always renew their contracts with us. I'd like to hear that. A lot of that. Cross our fingers. See if they say anything about this. I wonder if it's going to drop below $3 again. Max is asking... Contracts? Zed Estate, I have a good problem, I think. I have rolled into GameStop 120 expires this Friday, and I received a 906 premium. We just sit and cross our arms. Yes, you do. Yes, you do. You let that contract. Yes, sir. That's what you're doing. Max, aren't we right above book value at this price? I think you're right, Max. I think right now that stock is worth in cash what it's trading for. I think you're right. And I really expect this company to invest this cash to grow the company out. I'm expecting that too. And I'm waiting. Haven't heard anything yet, but yeah, I'm with you, Max. We're on the same page here. It's undervalued like crazy. 441 gain on the Dow. Near the high of the day, I'll give you that. And I'm happy. Look, I'm not complaining. I'm happy. The longer, the better. We're up 65 on the S&P, and we're up 274 on the NASDAQ, and we're still down $4.18 on oil. All good. This is all good. We just have to wait this one out, see what's going on. All righty. Continuing on the quest for information and everything else. Let's see what's going on here. Russia offers mixed messages on Ukraine troop pullback is a headline in the Wall Street Journal. Russia said it has pulled back some troops from near Ukraine, while noting that large-scale military maneuvers were continuing, and Western officials warned that combat units were moving into forward positions. That is still the big headline right now. All right. Let's see. What else is going on? U.S. weighs the China factor in drafting plans to punish Russia. And this is something the administration has got to keep an eye on. The headline goes on to say that the Biden administration is assessing how far Beijing would go to help Moscow circumvent sanctions and other punitive measures if Russia were to invade Ukraine. Now, what I think about when I see a headline like that is where China will say, oh, they cut you off from selling natural gas to Europe, we'll buy your natural gas. Oh, they cut you off from selling oil to the European countries, we'll take all the oil you've got. We're there for you. Nobody wants to take your rubles. Your rubles have been cut off the international market. We'll buy your rubles. We'll buy your rubles. Here's what we'll do. How about a deal? Instead of us buying oil and paying you in rubles or with Chinese yuan, what we'll do is we'll pay you in other goods and services. We'll work out our deal. It's a trade. We'll just do trade. Because after all, it's a state entity that is selling oil to us. The state entity will be paid by the Russian government in domestic currency, rubles, so that the oil company can pay its employees and do what it does. The Russian government now will receive whatever goods and services it gets, goods, which will then redistribute within Russia through its the supply networks, and will be paid for in rubles. So Russian businesses can buy goods that it needs from the Russian government through the trade deal of China in rubles. The oil company gets paid in rubles, and the rubles trade like crazy inside Russia. Everyone's happy. That's one way to circumvent U.S. banking restrictions for dollar and euro and sterling, British sterling transactions, Swiss francs, and so on. That could be it. The Americans have to weigh how far will China go to work a deal with Russia to try to negate American and European and other countries' sanctions. That's what we'll have to watch for. So, yeah, never a dull moment here. Let's see. Alberto, thank you for this donation. Been away, and I'm sure you missed me laughing out loud. Sincerely, your idiot nephew. Welcome, my friend. I always miss you. Glad to have you here. We're watching the Dow up 449 points right now. Rocket Lab at $10 officially at up 52 cents. SoFi only at 12.10, up a dime, only a dime. GameStop at 122.06. Now, GameStop's high of the day was around 122.25. It just got to 122.29. And now we're watching that right now, 121.82. So we're near the high of the day, but the range for GameStop has been 119.26 low and 122.29 high. GameStop isn't moving today. It is really quiet, which is tipping me off that we have downside here, because you go up 442 points on the Dow, you go up 65 on the S&P 500, and you're up 270 on NASDAQ. And this GameStop is only moving by $3 a share. This is not good. This is not good enough. I'm wondering if there's any kind of movement afoot that the Russians are repositioning other units elsewhere. That comes to light. Oil could go up in price $3 a barrel in 15 minutes. The Dow could drop 400 points in 15 minutes. And I wonder if GameStop will drop to 115 a share. That's what I wonder about. I think there's more downside risk to GameStop than upside. Just me. Good morning, Alberto, from everybody. It's nice to see you, they say. Let's see. Primary use for satellites will switch from telecom to observation over the next 3 to 5 years. Spire is my long play. Alberto saying, I hope you're all making money. I've been a bit busy with my new hires. Stay warm out there. Let's see. How does this compare, Bruce, to the Crimea thing? Well, the Crimea annexation was telegraphed a long time ago, and was clearly going to happen with the Russians taking over that Black Sea installation. This incursion now, the West has said enough's enough. We're putting lines in the sand, and the Russians are now really trying to determine how deep those lines in the sand really are. It's different from the last time. They weren't worried with Crimea. They really weren't worried. Alberto, hey, thanks for the update. I have covered calls on Boeing and GameStop. Right on. Yeah, GameStop 121.74 right now. Vilbus, the Russians aren't pulling back yet, so let's just keep waiting for that dip. There you are, Vilbus. That's what we wonder about right here. We're up 435 on oil, 91.11. We're up 457 on the Dow right now. About its high of the day at the moment. That's 1.3% on the Dow. The NASDAQ is up 275, 2%. and S&P up 1.5%. That's where we are at the moment. Okay, we'll see what's going on. Let's take a look here for any other news. Headline: Farmers feel the squeeze of inflation. Well, we all do. So no question there. That will, of course, keep food prices going higher or elevated. And keep an eye on all of that. We talked about the pension funds moving into private debt equity. That's been a new move, a new phenomena in the last few years, and it continues. Apparently, General Motors is going to restart Chevy Bolt production in April. They had a number of issues, battery defects and whatnot. Apparently, they've gone through that. Let's see. Glencore sets aside $1.5 billion to cover regulatory probes. Provision covers a series of regulatory investigations in the United States, the United Kingdom, and Brazil into allegations of bribery that Glencore expects to be resolved this year. Sounds like they're going to pay a fine and not admit guilt. Unbelievable. No one goes to jail, ever. Crazy. What else is going on here? Lots of other corporate news going on out there. Let's see. Yeah, apartment investors head south, bid up Sun Belt-based buildings. Dallas and Atlanta have seen more investment than other U.S. cities as landlords chase job growth. And real estate investors across the U.S. are betting heavily on apartment buildings in the South and the Southwest, chasing population growth and soaring rents they expect will keep outpacing inflation this year. Landlords say they are following the migration patterns of workers and their employers who relocated to Florida, Texas, and other southern states during the pandemic. These states, warm weather, business-friendly governments and laws, lower taxes, and fewer regulations that have been attracting companies and workers from California, the Northeast, and from other corners of the country. Foreign funds have come along for the ride, backing investments in thousands of apartments in major Sunbelt markets such as Atlanta, but also in places like Lafayette, Louisiana, the fourth largest city. Louisiana's fourth largest city, Lafayette. Investors poured a record $335 billion into apartments across the country in 2021. Nearly a quarter of it went to just 4 metro areas in the Sunbelt: Dallas, Atlanta, Phoenix, and Houston. In some other Sunbelt cities, total multifamily investment more than doubled over the year prior, according to a report by the real estate firm CBRE Group. Buyers are clinching an unusually large number of deals for properties that weren't listed for sale, investors said. Appetite to capitalize on fast rising rents far exceeds the number of assets available to buy. We get unsolicited offers non-stop, said Kip Soden, chief executive of Dallas landlord and developer RREAF Holdings. Mr. Soden said his company sold roughly $400 million in apartments in 2021, about 60% of which it didn't plan to sell. Many of those buyers are from the Northeast and West Coast, Mr. Soden said. Big buyers include Northeast real estate owners like Pennsylvania-based Morgan Properties, which teamed with the American arm of Saudi Arabia's Olayan Group to purchase a $1.75 billion portfolio of mostly Sunbelt apartments properties last year. Purchases include nearly 2,000 middle-income units in Tampa, where rent increases on new leases are now pushing 30%, according to Jonathan Morgan, president of the firm. Mr. Morgan said rising wages, including the demand from higher paid workers moving into Florida and looking for apartments, have fueled those gains. Before the pandemic, less than 2% of the company's holdings were in the Sun Belt. Now it is 20%, he said. New York's RXR Realty said it has also been scooping up off-market Properties, investing in 2 apartment buildings under construction in downtown Phoenix, the company's first deals in the Sunbelt in many years. The city's expansion of university campuses and medical facilities that attract knowledge workers, as well as new investments in transportation infrastructure, have made Phoenix an attractive bet, said Scott Reckler, RXR's chairman and CEO. The frenzy in the multi-family market is intensifying concerns about affordability, which were already present before the pandemic investment boom. Lawmakers in Tampa have begun to discuss the possibility of rent control. Earlier this month, the U.S. Senate Banking Committee held a hearing to discuss the effects institutional investors are having on housing affordability, including in Sunbelt states. But for now, there appear to be few threats to those billions in new investments. The rent growth has been so explosive, said Tal Perry, head of the East Coast and Latin America division of German fund manager Union Investment Real Estate, GmbH. The company entered the American multifamily market late last year, buying high-end rentals in Fort Lauderdale. The firm is already pumping up rents on lease renewals by 13%. How about that, apples, kids? Just to give you an idea what's going on. I have talked to you folks endlessly about how people are selling their homes in the north for big money, heading south and looking at the cost of real estate as cheap, buying up homes, buying up condos, and of course some who are just renting, but now they're running into these 20 and 30% rent increases because they're all coming in there. There's this massive wave of relocation going on out of certain areas of the country to other areas of the country. My thinking is, you know what, if you can work from home and you can create your own corporation, and you are now a corporate entity rather than a private entity, a one-on-one person, you can come into California and create a corporation in Nevada or Texas, and then hire yourself under a contract arrangement to your own company based in Texas for a minimum wage. And the Texas outfit has to have an office wherever you work from. Well, you happen to work from a room in a condo in California. Now, you're going to need tax advisory services. You're going to need someone who's a pro at this whole thing. I'm not the guy for that. But I can just imagine that a lot of people in their 50s who were going to retire 10, 15 years from now have already come to California, Arizona, Texas, Florida. They've set up shop under corporate entities instead of personal entities. And these rate increases and these costs are all pre-tax expenses. And so that they come off the top line, which is higher than they've ever earned before, come off the top line, and then the company has a net return. Then it pays salaries to the primary employee, maybe the wife, maybe the 3 kids, who knows. Income splitting done everywhere, and then retained earnings are left in the corporation for perhaps future dividends, keeping the corporate tax rate at a very, very low number after all those pre-tax expenses like rent or mortgage, taxes, internet expenses, cable expenses, heat, air conditioning, electric power, water, gas, all that stuff. Perhaps an automotive expense is part of the deal. Multiple cars are part of the deal. Insurance, maintenance, all of that, all pre-tax expenses from a corporate level. So that the individual net that used to be in a cubicle is now working from home for a corporation that they have put together, and the tax that they're paying is a fraction of what they were paying up north. The dollars are much higher than they ever were up north, and the expenses might be lower anyway because the cost of being up north was so much higher, especially New York, that even with these increases, makes no difference. But it is interesting to watch how funds and investment groups are moving in to Florida, Texas, Arizona, buying up existing properties and jacking the rents right away. Amazing what's happening here. Lots going on, kids. It's not as simple anymore. Most interesting. Anyway, there you have it. What else is going on here? What else is going on? Thank you, everybody, for being here. Oh, Zed is statusing my daughter, Araya, reminded me to hit the thumbs up button. I'm number 329. Well, thank you, Araya, for telling Dad to do that. We're at 339 thumbs ups now. I appreciate that. Keep them coming in if you could, folks. We do appreciate the thumbs ups. Helps promote the channel out there. Let me know what number you are. SoFi sneaking into the red, says Bobby. We're at 1202, only up 2. GameStop 122.16. The Dow up 466. Rocket Lab 999. Anyway, there it is. And yep. What else is going on here? What do I miss? Is there nothing burgers going on? Wavy wants to know. Let's see. Let's all go to the Cayman Islands, Max. I'd live in Puerto Rico, says Max. Aruba for me, says Duncan. Are we in a bubble? False wants to know. And yeah, no real estate people. The people I talk to in real estate think this is a bubble. The prices won't continue to rise as rapidly, but there won't be a major correction. There's just no inventory. It's when you have too many sales and not enough buyers, then the bubble bursts. Nick, I am number 335, Uncle Bruce. Thanks, Nick, very much. And if you can buy a multi-family right now for less than 200,000 a unit, it's a great investment. Duncan says, hey, Nick, you're late. Bobby, I was looking at houses in Saskatchewan yesterday compared to Ontario. Interesting. Got to have empty houses to have a bubble, says Pickcomb. There you go. Warren, I'm in Jacksonville. The housing apartment explosion is just too much. Please stay up north. Obama, babe, I have my highest investment returns coming from a real estate company out of Jacksonville, Florida. It's been a really good investment the past 3 years for me, says Obama, babe. Nazareth, have a great day, everybody. Maybe the trades will be in your favor. Max, if you can live in a unit and rent one out or two others, that'll do wonders for your net worth. Hector says that's correct. Nick, Uncle Bruce, a mimicked Beach Boy. I wrote 10 contracts. March 4 expiry, strike 130 on GameStop. 809 average is what I brought in. What does your crystal ball say? Will I make money today? Well, you're writing 130s with the stock at 122. So you're doing, you're way out of the money. Nice. Not too far out in time. Nice. We have not had a correction today. We have not any serious pullback at all. Nothing serious. We're up 461 on the Dow. Oil still down 465 to 90.81. I'm almost nervous that we've gone too far today. We're too high and we're too low on oil in one day. I would be happier with half of this, but this is very aggressive. Any little thing can screw it up. That's what I worry about. It's an eggshell rally, in my opinion, an eggshell rally. People are tiptoeing around, being very careful at it. So I would agree that writing calls on GameStop is not a bad idea. Out of the money, definitely. Top premium, yes. And just let's see what happens. I mean, you could have written them this morning at 118. Now you can write them at 122. I love it. I'd rather you're writing at 122 rather than 120 or what have you. AMC is only 18.25. It's up 50 cents. This stock has traded 11.9 million shares today. We're an hour and a half into this market, aren't we? Yeah, we're past an hour and a half. Where is the volume on AMC? It's not here. We're up 50 cents technically. Yeah, we're at 18.25, but this is not looking very good at all. This is not looking strong. Anyway, the Dow is up 471. That's holding the floor up under everybody. All, higher tide lifts all boats. That's what we got right now. Alberto, if you are seeking for a great real estate deal, check your local tax foreclosures. Don't let the valuations deter you. They will take whatever you offer. Vilbus, the crush of humanity in North Texas is one of the reasons I had to get out. It is so crowded. The triangle of Dallas, Fort Worth, down 35 to San Antonio and over to Houston is stuffed with people right now. I can just imagine. Dr. G wrote 44 $125 calls for this Friday for a quick 20 grand. Rock and roll. So there we go. We got 44 contracts, 125, stocks 122.25, up 516 at the moment. Interesting stuff. Miss Jen, Oh, the bagels are a coming. The bagels be a
I have to
coming.
go back and get the cola.
Oh, gotcha. Thank you so much. Let me take a schluck of this before you do that. There we go. Get some nice cold cola. Thank you so much. Dr. G, way to go, buddy. I'm watching that trade with you. We'll see how this works out. Same thing with Nick. Guys are doing it right, I think. Now's the time to write contracts.
An article on the business news.
The business
on
news.
CBC this morning.
Yeah.
It's talking about how Tesla, specifically Elon Musk, doesn't like having to spend money on advertising.
Mm-hmm.
It's just a personal thing with him. And how this Super Bowl, 10 minutes of it was dedicated to automobiles. And most of those automobiles were electric, which are 2 to 3 years from being on the road.
Not available.
So the guy said, I see no reason why he should ever advertise. Plus, he only has like a 4% inventory.
Yeah.
So when you go to get a car, chances are you're still going to have to
Wait
wait
list.
a little bit.
You're on a wait list.
So why would Tesla advertise? Why would you spend money on that if you don't need to?
There's no supply of inventory anywhere for
I
Teslas.
don't know.
That's right. That's right. $7 million for an ad with a $7 million future commitment to NBC to keep advertising. And they're advertising electric cars you can't buy.
And electric trucks that
don't exist.
A good 3 years.
Yeah.
Down the line. Yeah. Did I put on enough horseradish? I don't see any wincing in pain.
I taste it.
Oh.
But
But you're not getting a good zing out of it?
not yet, but maybe there's a few spots. There might be a hot spot here that I haven't hit.
Little hot spots in there, you never know. Okay.
A little landmine waiting for me. I asked Jen to really hit the horseradish on this thing.
I'll remember that for next time.
I wanted to clean up my sinuses today. So I figured I'd start chomping while she was talking. Oh my, this is so good. Oh yeah. Alberto was saying that Bill was Texas offered me the Chiefs position a few years ago. I was stuck in traffic for over 2 hours. No money worth me sitting in traffic like that. Max, I expected the estates created prematurely by COVID. The estates created to alleviate some of the demand pressure, but not all. Plus, new building is at a trickle. Interesting. Lobo, gracias, Alberto. I am currently in the market. I will look into that. In Texas, no less. Laughing out loud. Alberto, even if the property is a dump, buy it outright and use that property to outmarket profits into, to sell the property a year later and keep most of the money compared to paying 30% capital gains. Interesting stuff. The Dow is up 449. Rocket Lab is holding at $10. SoFi at 12.10 up a dime. GameStop 124.01 up 6.92. AMC 18.39 up 64. Matterport 8.09 up 41. And ME at 4.49 unchanged. Beautiful. Hector says GameStop's taking a shot. Well, it's at 123.76 right now. The Dow up 442. Oil at 91.13 down 433. Spire 308. We're backing off. We're still at 4, but we were higher than this. ATIP 288 up 18. SmartRent up 15 cents. 886. Sixtera holding its gain up 45 cents, 1173. We're up $10 on Vanek. Home Depot up 230, IBM up 72 cents, Microsoft up 472, still at 299. Apple 171.41 up 250. It's been there all day. Goldman up 440, 360, 464. Cisco up 95 cents, Facebook only up 22 cents, Amazon up $18, Tesla up 41, Google up 29. So we have some upward movement, but not incredibly dramatic everywhere. It's not like that. The Dow sure looks impressive with a 441 point gain, but it is only in the reality of it 1.29%, and Nasdaq is up 1.9%, which is actually a little bit of a slippage in the last half hour. Oh my mind. Yeah, the Dow is at a gain of 437 right now. Mm. 1210 on SoFi, up 11 cents. GameStop 123.66. So good. I hit a hot spot for horseradish. Very good. Oh boy. Let's see. Nick is saying, I also wrote 50 SoFi, March 4th expiry, $14 strike for 48 cents to help out at NTPC for scalping. There you go. $14 strike on SoFi's. Speak of the devil, NTPC says, Vilbus, just saw a New York Times article on Twitter about new builds being delayed on closing due not to be able to get their garage doors installed. Yeah, this is the problem with new real estate, closing out properties and getting them finished. Supply chain problems everywhere. Mm. Mm. Most interesting. People are searching town records for building permits and going and buying the place before it's even built. I can't even get hardware for my garage door. And this is a sign of supply chain problems. And this is the problem for a company like Home Depot. Their earnings might be missed. They might miss earnings projections if they have critical part shortages of certain things. If you have parts shortages to install a garage door, you're not selling the garage door. If you can't install the garage door, then the contractor might delay finishing the garage itself, which means shelving being purchased will be delayed, lighting, all kinds of other issues come into play here. It's a chain reaction of delays that can really screw up projections, because public companies every 13 weeks have to report how they're doing, and that's a tough one. Cyxtera has been creeping up with some good news, this friends. Well, we'll see how this all works out. The Dow holding a 436 gain right now. Cyxtera is up 45 cents. 1173. AMC looks a little better here, 1853. The high for AMC, 1859. The volume, though, only 13.3 million. Got a little hit of that horseradish here. Woohoo! It's waking up the sinuses. Oh boy. My, oh my. Cheers, everybody. Oh, man. Man, oh man. Love clearing out the sinuses from horseradish. Woohoo! Man, the Dow is holding a 433-point gain. SoFi up 11 cents. Rocket Lab up 52 at $10. GameStop 123.58. Just sitting there. Matterport is at 8.12. ME is 4.50, up just 1 penny. Spire is up 4 cents to 3.08. ATIP is up 20 cents, 2.89, 2.90. Good on ATIP. Smart Rent up 16 cents to 8.87, and now Cyxtera is up 50 cents to 11.78. That's kind of the high of the day over there. Anyway. End of the bagel. Will there be another one? No, just the one. Just one bagel, please. That was great. That was just terrific. It's a most interesting market, holding gains rather nicely. Oil at 91.26, down 4.20 a barrel. Gold down 19.20 an ounce. So gold is off. Oil is off. This is definitely helping. That fear factor trade is not an issue, it would appear. Let's take a look here. What else we got going on here? We've got VIX down 240, 8.4% lower at 25.93. So the VIX is showing improvement. The fear index is not as bad as it was yesterday. Russell has gone positive. The Russell 2000, it's up 38 points, up to 1.9%. The NASDAQ is up 1.9%. S&P is up 1.4%. The Dow's up 1.2%. That's what's going on over there. Man, oh man, oh man. Lots to stay up on here. Mm. Alrighty. Lots to watch. Tons, 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 tons. My, oh my, oh my. Okay. Yeah. Max has got a fun fact here. Puerto Rico's power company uses 60% of its revenue just to buy and import oil to run its grid. It runs on oil, diesel fuel, and so on. Puerto Rico in the Caribbean where the sun shines so much. There are solar farms down there, but many were damaged during the hurricane years ago. But that is an area that I would love to see Tesla somehow. If Elon could somehow get in there, and without too much regulatory problem, that might be the issue. He might find it. I'd love to go to solve Puerto Rico's power problem with the solar, but the regulators make it impossible. I can understand Elon not doing anything, but boy, is that an area that could use help? No question. Uh, yeah, here we are on an island surrounded by constantly moving water, wind, and sun. You know, windmills generating power. Oh my gosh, solar. So much potential for Puerto Rico. Just so much. Anyway, Nick is saying, I bought a brand new air conditioner a year ago, and I'm getting loud noises from inside the air conditioner. I called the repairman. He says there's no way to open it up. I can't open the thing up. Just buy a new one. No such thing as repair. Just replace it. It's incredible. And it's import from China, probably. Unbelievable. Isn't that something? ATI up 7%. Nick, I want good old fashioned made in the USA and willing to pay higher for quality products. Not available anymore. Max, it's a corrupt government that we propped up. It's a place that is close to my heart, and I see the potential every time I go. There you have it. It's what can I say? I'm not sure about Puerto Rico. I think you're talking about Puerto Rico, right? Yeah, you're talking about Puerto Rico. It's too bad too. 386 is the gain now on the Dow. We've had a little dip here, a little dip. Rocket Lab's at 9.99. SoFi still up 11 cents. GameStop 123.55. AMC at 18.45. A little dip there, still up 70 cents. Matterport 812, ME at 450 up 12, now 1.2 cents on ME up 1.2 cents. Spire up 3.8 cents, 307.8. ATIP up 17.5. Smart Rent up 16. Cyxtera up 45. A little pullback on the Dow right now, just a little. We've got S&P up 57, Nasdaq up 254. The NASDAQ market was up over 2%. It was like 2.1% gained. It's now 1.85, a little pullback. Oil at 91.25. Looks like a little pullback has happened there. Yeah, a little pullback, or actually a little pump up, just tiny, like maybe a dime, nothing much yet. Gold is still looking very good, so no problem there. But NASDAQ has bottomed off a little. S&P has backed off a little, and now the Dow has backed off a bit to 382 at the moment. Up 382 at the moment, sorry. We'll watch for all of this. Of course we will. It's what we do. Yeah, so ARK Innovation up 222. Peloton only up 7 cents. Tesla up 40. Cisco up 85 cents. Goldman up 344. Apple up 255. So we're not running away here with anything at this point in time. We're really not running away with anything. Okay. Credit Savage. Oh, good morning, simpletons. Uncle Bruce. I hope everyone's good and healthy today. I hope everyone's healthy in your house. Cindy, I haven't made one trade today. I think I'm learning patience now. You're talking. Uncle Bruce, so Midland Holdings, a residential and real estate juggernaut in China, Hong Kong, Macau, will use Matterport digital twins exclusively for their portfolios. Holy moly, gonna load up on Matterport now. There you go. Yes, Remington Firearms just settled with Sandy Hook families, took partial responsibility. Max thinks it's a $73 million settlement. Kareem, Uncle Bruce, I think you mentioned it, and I heard it on CNBC Power Lunch the other day. That no is not a time. It's not a time to buy stock. If you didn't mention it, why would this be said? Um, it is not a time to buy stock. It all depends on what stock you're thinking about buying, I guess, Kareem. It all depends on which one you're thinking of buying. We're back up to 410 on the Dow. Little recovery here. Rocket Lab back to 1001 and SoFi up 14 cents. GameStop 124.25, and I think that is pushing the high today around. Yeah, 124.45 was the high, and we're at 124.25 right now on GameStop. 1856 up 81 cents on AMC. We must have had a computer buy program come in on this market across the board because everything seems to have moved up at the same time. Um, okay. Krim, I'm not sure if you're asking me about one particular stock. Are you talking about the whole market in general? Um, I'm assuming the whole market in general. Correct me if I'm wrong. 413 is the gain on the Dow Jones right now. Rocket Lab at 1002, SoFi 1216, GameStop 124.26. In general, Kareem saying, yeah. Well, I can see where the market, where experts are going, this might not be the right time. Maybe the markets are going to come off a bit. There's always a good time to buy certain stock. It's a question of what your timing is. How long or how patient are you for a return? What is your objective? Are you an investor in a company like, say one of the big banks, and you're looking for interest rate policies to move up the price of the banks as rates continue to rise? If that's your strategy, you might buy into a stock, or you might buy into an ETF, a banking ETF, where you're covering the industry as a whole. If you believe in the future of computer chips, that the future is bright, the demand will be strong for another 3 4 years, you may want to be in that SMH ETF I keep talking about, because it represents 60 odd producers of chips worldwide. But you've got to have a longer term outlook than a 1 week or a 1 month turnaround time. If you're an option writer, you never stop. An option writer is always writing and is always an assassin waiting to make a move, take the shot, and score time depreciation and dips in the markets to make money. That's the way it is. That's the way we are. That's the way the mentality is. So Karim, everybody has their whole thing on it, their whole take on it. The Splair is saying, Karim, if it is said due to Russia, then just keep in mind that history told us more than one time that a retreat is not always a retreat. I do actually enjoy everything with a grain of salt, though. Maybe holding cash is better. It all depends on your situation. Correct, Savage. Now is the time to buy any stock you have high conviction in. If it goes down, average down. If it goes up, you average up. This is when millionaires are made, where everyone else is scared. Even Meet Kevin is scared. There you go. There you have it. You gotta, all depends on what is your objective. If you're a fan of SoFi, you don't care that it's 12.20. You don't care if it's 11.50. You don't care if it's $14. You're a fan of SoFi. You're a fan of SoFi, and you're not looking for a $15 handle to be satisfied with SoFi. If you're a fan of Rocket Lab, a $10 price tag for this stock is a no-brainer for you. You're a fan of AMC or Matterport, Emmy, same thing. You're a fan. You're in, and you're in long. Anyway, there you go. Credit Savage. Hey, Bruce, I hope we get a bit of pop so I can sell some covered calls. There you go. We'll see how it goes. We have lots to watch and keep track of, don't we? We're up 444 now on the Dow. We're approaching the high of the day again. We have not had a serious pullback yet all day. We have not had it. I wait and wonder when it'll come and under what reasoning. Oil up 395 at 91.51. We're watching. Yeah. Yeah, I'm liking the cybersecurity sector now, considering moves by Russia. There you go, Swinson. There's another area there. That's always going to be in demand. 124.96 on GameStop right now. 124.96. I think this is the high of the day. Yep, it is. Up 787 right now. AMC at 1871, up 96 cents. I think that's the high of the day. Yeah, just about 1879 is the high of the day. We were just here. We're now at 1869. We backed off a dime from the high of the day. 124.59. We're backing up a little on GameStop, but we're near the high of the day. On it, we're up 439 on the Dow. That's also right up there. All righty. SoFlies pops up a little. Yeah, 12.15. Just barely up. I mean, this is not encouraging to me. SoFi should be up $1.50 today. It should be at 13.50, 13.70. So that's my opinion, but it's not reacting at all. We're only up 4 cents on ME. We're up 2.5 on Spire. We're up 12 on Smart Rent, 16 on ATIP, 45 on Sextera. These gains can be wiped out in 15 minutes if we had a serious development in Ukraine. So we're on eggshells. That is my guess. We're on eggshells. There you go. Everyone is different. All depends on your stomach and your plans, short or long. I am of the Uncle Bruce and Warren Buffett school of thought, which is if I plan on holding years, covered call writing is going to make me some money. There you go. Coyote says, I think my GameStop option is cooked. Not seeing GameStop coming back anymore. Well, just when you think that, it does the opposite. You know how it is. Credit, it's only Tuesday, Coyote. Relax. GameStop can go down $20 in half an hour. We all know it. That's true. Credit Savage is aware. 125.20 on GameStop right now, up 8.11. 18.75 on AMC, up $1. And the Dow up is up 4.51 at the moment. There you have it. That is the deal. We'll see how it goes, folks. I'm going to bid you adieu until this afternoon. I'll be back at 3:00 Eastern time. Thank you, all of you who have subscribed to this channel, who are members of this channel. Your gold memberships, thank you. Those of you who have checked out my website, thank you. Stockmarkerswithbruce.ca. You're taking courses on how to write options. You are learning a whole bunch of stuff in a whole short period of time for not a lot of money. Way to go. And those of you who are writing options, way to go. There's some money in them there, Hills. Hi, Uncle Bruce. Number 360 on your thumbs up meter. I wrote a GameStop 230 contract March 18th, and current price is now 124 a share. Does that mean it has to dip below 124 to flip it sooner than March 18th? When does shrinkage start to kick in, and what rate? Okay, so you wrote a $230 contract, and it's out of the money, obviously, because the stock's at 124.60, 125. So you're not going to be exercised on the stock. This contract, of course, is right now sitting, out of the money. It is in the option has a risk of losing all of its value, of course, because a 230, has. You probably wrote a 130. 130 has no value whatsoever. The value of the 130 right now is 855 to 950 is what I'm showing. So the stock is now about $6 out of the money, $5.50 out of the money, and you've got to sit till March 18th. So we have a little ways to wait. Hang on, actually, I misspoke. The March 18th 130 is now 12.50 to 13.35. Pardon me. So if you take a look at the 135 contract, which is $5 more out of the money, its bid is $11. So if the shares were to drop $5, to the 119, 120 range, your contract would go down to a buck and a half right away to 11 odd dollars. If your stock dropped another $5 a share, your stock would go down. Your contract would go down to 980. So you have some downside here just on the movement of the stock. Number one. Number two, though, as every day goes by, this is Feb 15. This is a 1 month contract, so it's got about 20 trading days. So every day it's going to lose 5% of its value on average because of shrinkage. And so it may not be perceptible at the beginning, but don't be surprised if a week from now, if this stock is around 124 a share where it is today, your contracts a week from today will probably be trading at about $9 already. A week after that, they'll be trading at 6. A week after that, they'll be trading at 3. And a week after that, they'll be trading at nothing. So you've got upside coming your way if the shares stay down here. So there you are. Anyway, let's see what's going on. Have a successful break, you all. Enjoy the breast, Uncle Bruce. Wow, that GameStop volume is super low. Yeah, no, is it a 230? It's not. You didn't write a 230, did you? If you wrote a 230, then you haven't got a contract in the money at all. Like, you are sitting on a 253 contract. You don't have to do a thing. Just let it cash in. Anyway, there you go. I'm thinking you wrote a 130. Credit Savage, you take care. Hang in there. Get through that virus and come out the other side, please, for us. And we'll see you later today if you can make it. Thank you for following me. 433 is the gain on the Dow, which is not the high of the day, but it's not a massive sell-off either. But we are at with a 434 gain on the day. 1012 on Rocket Lab, up 64. SoFi at 1219. GameStop back to 124.44. It did get up to 125.20. Now we're at 124.50. AMC at 1864. That's backed off about a dime or so. It got up to 1879, so that backed off 15 cents. Little profit taking coming in here and there. We'll see how it all plays out. But I'll be back at 3 this afternoon. We'll follow this together right to the close for the last hour of trading. Hang in there, everybody, and enjoy. And let's see how it all works out. Okay, hopefully make a bunch of money, and we'll see what the market wants to do. Thanks, guys. We'll catch you later. Bye for now.